I can hear you, Tony. Yeah, how are
Lovely.
you?
We can hear you loud and clear. That's great. Okay.
Good.
So we've got Serena from Quantum Mortgages, who new lenders to the market, got some fantastic products. I've been banging the drum on these products now for the past couple of months. In my second presentation, I don't need to do that anymore because Serena's now here to talk to us in person. So you should all receive this morning. You received the product guide for Quantum. I've sent you all an email this morning. If you've not got this, just pop an email to me or one of my team, to Kylie in the office, and she'll make sure this comes out to you, or check your spam because that's probably where it will be. But this gives basically all the details on their products, and it's also useful if you've got that to hand whilst Serena's talking. A little bit about Serena. This is the longest, the longest one I think I've ever read, because this basically, they're thinking of turning this one into a mini series. I think it's so long. So after Serena left Kingston University with an economics degree in 2007, she began her career in financial services at Capstone Mortgages, as a name from the past. After finishing her CMAP, she worked as a mortgage advisor and later headed teams of advisors at both NatWest and Post Office Money. In the last 4 years, she has been in a business development manager at Santander, helping intermediaries secure both residential and buy-to-let mortgages in the South. Serena finds it very refreshing to work with a new lender like Quantum, who want to lend and use common sense. In her free time, Serena is busy running around after her 18-month-old son. She has just booked her honeymoon 3 years after getting married. Congratulations. Serena enjoys cooking, but mainly eating, and checking out different cuisines in restaurants. She's always doing DIY around the house, although it's usually after getting a quote for the work and wanting to save money, so she ends up doing it herself. I second that. I'm exactly the same.
Yeah.
Her interesting fact, when Serena was at NatWest, she was shortlisted to be in their TV advert, as they use real staff in these. Unfortunately, she was really awkward in front of the camera and did not make the final cut, which probably was for the best, so she actually left not long after. Hopefully you're not feeling nervous about today or awkward.
No, I'm fine now. Well, it's not a camera, is it? We've got used to this, like Teams calls and videos.
Absolutely.
But when there's a big camera, it's completely different.
So Serena, it's over to you. I'm going to disappear. I'll see you in about 20 minutes. Good luck.
Thank you so much. Thank you, Tony. Okay, so thank you very much for that, Tony. So Quantum Mortgages, we are a brand new lender in the market. So some of you may have heard of us, and some of you may not have. So really today, I just want to go through how we're helping, what sort of cases we can assist with. And then you're more than welcome to contact Tony or myself if you've got any cases. So the reason Quantum actually was created, we believe there was a gap in the market where not enough common sense was being used. It was a case of either it fits in a box with policy, or it fits a system, or it doesn't. And sometimes you'd have a really good case for a client, but it didn't quite fit a lender's box. So that's why we've come into play. So we want to help experienced landlords with lending on properties. So initially, this shows at a high level our target market. So it would be someone who already owns a buy-to-let for a year to be able to come to Quantum. But in saying that, if you had, so let's say if I was your client and I don't own a buy-to-let at the moment, but let's say my brother or sister or my parents, they had a buy-to-let and they were willing to go on the application with me, that would be absolutely fine. Now, we allow 4 applicants on a mortgage application. So you could have up to 4. And you don't need to be an owner-occupier, although you've got to have the experience in the buy-to-let world. And we lend in England, Wales and Northern Ireland. And in my understanding, there's not that many lenders in the Northern Ireland market. So that is a USP of ours. We're happy with complex company structures, which I'll go through in a bit more detail later. And we are more than happy to help portfolio landlords as well. So So Quantum, we think that landlords want to get the highest yield. So they've invested their money in property because they want to get, a great return. So you see a lot of experienced landlords wanting things like HMOs, multi-units, holiday lets, Airbnbs are a lot more popular now as well. Shared houses, student accommodation, above commercials. There's a list there of what we believe they like to invest in because they're going to get the best sort of yield in return. And then tenancy types, we are really quite flexible with tenancy types. So corporate lets are absolutely fine, up to 5 years. multi-tenancy, student-let, everything listed there we're fine with. We're also happy to help with those vulnerable tenants. So those are like Serco, Mears, those sort of companies. We are happy to lend and help those landlords with those types of properties. We also do a real day one remortgage. And what I mean by that is, let's say if you have a client who's gone to an auction and they've got themselves a bargain, they've bought cash, or potentially they've taken a bridge out on it, and then they want to, either replenish their cash or repay that bridge. And we would do a real day one. It doesn't have to be registered at Land Registry. We would just want to see sight of the TR1 form. So as there's quite a few delays at Land Registry at the moment, that does really save time. If they did get an absolute bargain, we are happy to lend on 80% of the open market value, and we don't need proof of invoices. So let's say they want to borrow, I don't know, £50,000 to say, I'm going to do the kitchen, I'm going to do the bathroom, update it, and we would just need a note for that. We wouldn't need, sort of invoices to break that down. When it comes to personal guarantees, we don't require any if the LTV is 50% or lower, and we have no compulsory legal advice at all. So that is a saving to your client of at least a few £100s. We are happy with joint conveyancing, and we don't have a panel. So whichever firm, whether you have some that you work with, you like to recommend, or if the customer has their own they like to work with, that's absolutely fine. We just ask that there's 3 SRAs at the firm for us to work with them. Now coming on to the limited companies and complex structures. So although we lend in Northern Ireland, if it was like a limited company or an SPV, that must be registered in England and Wales for us to assist. And we're quite flexible on who needs to go on the application. So if you had a scenario, let's say you've got a limited company and you've got 2 brothers who own this company. One of them has a 51% share and one has 49. And let's say that the one with 49 is abroad or away and it's a bit difficult to sort of get all documentation. For us at Quantum, we would be happy as long as the person has a 51% share and they can be the one only going on the application. So we've got a bit of common sense approach there and simplicity there. Or you might have an example where you've got, let's say you've got a mum and a dad and you've got 2 children, and the children are 18, but you've got to be 21 to go on a buy-to-let mortgage application with ourselves. So what you could do is, as long as the parents had 51% share or more, they would go on the application, obviously even though the children are part of the limited company. Again, it mentions that not all directors have to assign a personal guarantee. It's still the same as 51% share. So it just simplicity. Newly formed companies are absolutely fine. So if they set up a brand new one, a limited company or SPV, that's absolutely fine. And holding companies are also acceptable at Quantum. When it comes to sources of deposit, we are really flexible with that. So some lenders may say your family are welcome to gift a deposit. However, it must be an immediate family member, like brother, sister, mum, dad. And we are fine with any family member. So it could be literally 3rd cousin. They could live abroad. That's absolutely fine. Being Indian, everyone is my auntie and uncle, so that would be fine. So really, really flexible and common sense. We are happy with builders gifted deposits. I don't know how many are actually happening in reality, but if there's some out there, we would accept 5% of those. Directors loans, we're happy with. Gifted equity is absolutely fine also. And intercompany loans, we are happy with as well. Now, adverse credit. So we're not an adverse lender at all. However, in saying that, if it's been a one-off event that's happened to the client and we've got a reasonable explanation, we can take a view on those. So I can give you a real-life example that I had. So we had a client, experienced landlord, had several HMOs, and what had happened on one of them, I can't remember who the lender was, maybe it was Ken, I might make that, but they basically had a mortgage statement and they thought, the COVID payment holiday, they thought that was given sort of automatically and that they didn't have to apply. So for 3 months, they didn't pay their mortgage on the buy-to-let. They then contacted the lender and just said, this is what's happened. It was, my mistake. Cleared it all up, was all up to date. Came to us. A lot of lenders didn't like it because on the mortgage statement, it was obviously showing that there were some missed payments. Everything else was clean on their credit rating. So we were fine in that scenario in regards to helping that client. So things do happen, and we want to take a view. But if there's been several sort of issues, then we're probably not your lender of choice for that. So we have 4 different ranges. So I'll go through them. But what I find best, to be honest, is if you think it fits on this, go on our website or contact Tony and myself, and we can explain the detail. As I know there's so many lenders and you can't, remember everything. So the first range is our single unit properties. So this will be your normal houses, your normal flats. In this range, a studio flat would be above 30 square meters. And already it mentions at the top there, you could obviously purchase in a personal name, limited company, SPV, that's all fine. And you would need 1 applicant to have experience, and that would be 1 buy-to-let for a year. Then we come on to our green range. So, Tony mentioned, it's a really valid point that I think there's going to be a lot more emphasis on the EPC rating of properties. So we've come up with a specific green range. And what it's designed to do is our normal LTV on a single unit would be 80%. But in this scenario, we are happy to give another 2%. So if we say someone had a mortgage of 300,000, they would get another 6,000 to improve the property. So if it was already A, B or C, they would obviously just improve it so that C went to B. If it was outside of that, that's also fine. And they would need to bring it up to a C, and we would re-inspect. So I think definitely getting closer, maybe more people are going to start, paying attention to the efficiency of their rental properties, and we are happy to help with those. The next range is what we call the multi-unit range. So this is for the properties where you've got like a multi-unit. So you've got a house, and then it's been split into sort of up to 6 units on this range. We've got no requirement on the size here. So some lenders will say, okay, each unit's got to be 30 square meters or 25. We have no minimum, so we're absolutely fine. If 2 are quite small and the others weren't, that's absolutely fine with us. HMOs on this range, we would go up to 6 units. And on this range, you would get your holiday lets and your Airbnbs. Just 2 things to be aware of on those. We do use a normal AST valuation, so we wouldn't actually use sort of what they get, like peak holiday or off-peak. We would just use a normal AST, and it would need to be on a recognised sort of holiday website like Airbnb, Booking.com, that sort of thing. But actually, again, in this, we're quite flexible. So I had an inquiry where the holiday let was in Watford, and I was thinking, is that a holiday location? But I asked the question, and they said, yeah, there's Harry Potter world there. So yes, it would be. And I mean, it was being rented out as a holiday let. So again, that common sense approach, we'll ask the question and see what we can do. So happy to help with those types of properties. Then we move on to the specialist range. So here we've got some really, quirky stuff and some really good USPs. Now, to qualify for this range, 1 applicant must have 2 buy-to-lets for 2 years. So we want a little bit more experience. So on here, I'm not going to go through each bit. You can, sort of see it on your screen. But the main things here, there's absolutely no maximum age on this range. The previous ranges, the maximum age was 85 at the end. On here, we've got a minimum loan of 25,000. On the previous one, it was 100,000. And this is really designed, some people sort of invest up north and because the yields are better, so they need that sort of smaller loan. The maximum on this range is 500,000, and the minimum property value is 70,000 on this range. And on the first range, as I mentioned, it's 125. We would go up to 12 units on HMOs and multi-unit blocks here. We're happy to help with ex-local authorities. So we would go up to 12 floors if it was ex-local authority. But a good thing that we do is we don't need any percentage of private ownership. So some lenders say, yeah, well, more than happy to lend on ex-local authority, but actually 50% is already got to be privately owned for us to lend on it. And we literally have no minimum at all. So happy to help with those. On this range, we get a lot of inquiries on this. It's the studio flats with less than 30 square meters. So I think the smallest one that we've done is 13 square meters next to Harrods. So absolutely tiny, but great location, clearly next to Harrods. And deck access, we're fine with those, happy to lend. We are also in the world of a semi-commercial. So a scenario would be, let's say your client owns the freehold of a block. So you've got a unit at the bottom, so it's a retail unit and any sort of shop, and then they've got 2 flats above. We would be happy to lend on the whole unit, but just to be aware, we wouldn't use the commercial rent income, only the flats above, but we would lend on the whole thing. And the only thing to bear in mind there is the commercial can't be more than 40% of the area. So 4% is fine, it can't go above that, it can be less than that, and 60% would be the flats above, or it could be more. Ex-local authority, coming back to that, we would be happy to lend on those below 200,000. I don't know how many of those exist, but we would be happy with those. And properties above or adjacent commercial premises, we're more than happy with those. So your normal commercial, like your normal retail shop, is absolutely fine. But also we're happy with takeaway shops and alcohol sales. So we have lent on flats above pubs, bars, chicken shops, that sort of thing. We're absolutely fine. If there happens to be a takeaway shop or alcohol sales, we'll limit it to 65% LTV, but we're more than happy to lend. We have no requirement for a lift if it's like a big, large block of flats. And actually, the sort of new build developments you get where they've got, like, let's say a Waitrose at the bottom, and then they've got these new build flats, we're happy to lend, and that wouldn't have the restriction at all, because that's like a new sort of style block. So we're fine with that. And on all the ranges I have mentioned, there is absolutely no minimum income required. All we would look at is their bank account conduct to make sure that, you know, everything is getting paid on time, there's no late fees, that sort of thing. So yeah, that's our specialist range. Moving on to expats and foreign nationals. So we are more than happy to help these types of clients. Now, a few things to be aware of. So we do use the Basel index, depending on where the person's based. So if you're unsure, I think you might be able to Google it, but again, you can just get in contact and we can let you know. Now, to come to us, they've got to have a UK bank account already, and they do need to have 1 buy-to-let for a year. But again, if, let's say, the applicant you have doesn't have that requirement, but they do have someone, let's say in the UK, who has a buy-to-let and they're willing to go on the application like a family member, then that would be a way you could sort of work around it. Just so you're aware, on this range, there is a minimum income. It's £35,000 for one applicant. And here we've got a maximum LTV at 65%. We've mentioned the personal guarantees, not needed if it's below 50% LTV. And we accept SPVs with a UK director. And we've mentioned day one already. So day one, we're more than happy if there's a returning expat. Here, so we do really want to help yourselves with, you know, complex cases or ones that you're struggling to place that maybe not sort of your day-to-day ones that you come across. So we really want to use our common sense to help these types of clients. And then here's a high level of where we get our most inquiries at the moment. So the ones highlighted in orange at the moment are the ones that we get a high level of inquiry. So the fact that we've got like a genuine no minimum income, the studio flats less than 30 square meters, you know, not a lot of lenders are keen on those. The properties above or adjacent commercial, the semi-commercial, the day one I've mentioned. So the 2 that I haven't yet mentioned is the reason for capital raising. So we are literally going to lend for any legal purpose. The only exception is going to be for gambling debts. We would not lend on that. I don't think anyone probably would in the market for that. And obviously if it's a failing business, but things like a tax bill are absolutely fine. You could invest in a business as long as not to prop it up. If it was to sort of grow it, that would be fine. Leasehold, we are really flexible because we only require that there's 35 years at the end of the term. So you could have a client who either owns property already, wants to remortgage it, or wants to invest in a property, and let's say it's got a 50-year term when they see you, you could do 15 years, and that would be absolutely fine with us. And then I guess to give a bit of peace of mind, I'm sure we've all had cases where they sort of said, oh yeah, subject to valuer's comments, and then actually what happens, the valuer goes out and then gives like a nil valuation. So we wouldn't have that risk here. So we use a specialist valuer panel, and we've had the conversations that they follow our policy, but the worst case would be that they give a cash value rather than sort of going out and then the valuer decides the property is worth nothing. So wasting your time and a customer's time. So yeah, we're happy to help with those types of cases. Here is our ICR and loan information. So I won't go through each part, but I'll just high level highlight some good things here. So limited company at 125. The majority are fitting on the 5-year fixed. Although things like HMOs and multi-units, they do fit a lot of those on the 2-year, and we've also got a 2-year tracker, which the rate is quite attractive. When it comes to pound for pound remortgages, we actually won't stress test it at all. So if a client is with another lender and let's say they're in a high SVR, but actually the rent is not stacking up and they're almost like a buy-to-let mortgage prisoner, for those types of cases, you're welcome to bring them to us and we wouldn't stress test it. So it would definitely fit as long as they're doing a pound for pound. And as long as our rate was more beneficial than what they're on, and we would be happy to help those types of clients. Existing portfolios. So if a client does have an existing portfolio, you would stress test 100% at 5% and make sure that as a whole, not each property. So the ones that I've had so far, all of them are absolutely fine. We've had no issues with that portfolio. And when it comes to submissions, so I know for your own compliance, you will need to get a lot of paperwork from the client. And what we've tried to do is use electronic ID and open banking. So what it means is the client actually gets a link. So one link will be for ID and one will be for open banking. And they basically add account number, sort code. They can add several different ones. And then the underwriter can see those accounts only. And then obviously ID, they take like a selfie, and they would put like the passport or driving license. And just to make your clients aware, if they choose that option, although the selfie take is obviously just their face, we can see their shoulders. So if they are topless, we can see that. So we do see the whole, the photo, not just the face. So yeah, we've had some revealing electronic ID back, so just make them aware. But the reason we've done that is just to make it a lot quicker. So instead of yourself uploading the documents, they can just complete the links and we get it in straight away once they've done it. Of course, if you've got clients that maybe don't have the time or they prefer not to, you don't have to choose this option. It's just that we find it a bit more slick. Then you're welcome to send in. We would ask for bank statements and ID. And then here, usually no is like my least favorite word, but here we've got some good no's. So again, when it comes to the common sense, we've got some really good things that we're doing. So no credit scoring. So the case will always get in front of a person because we don't have that credit scoring requirement. I mentioned the no ICR calculation for the remortgages. We have no requirement for business plans or asset and liability statements, so no need for that. No minimum time of ownership, like the day one remortgage, it's the genuine day one. And no pay slips, accounts or bank statements. That's obviously if you go for the electronic banking. No compulsory legal advice. No limit on stories for private blocks. No maximum age. No restrictions on bridging refinance, and no restrictions on the solicitors panel. So we've got some really good scenarios there where we're saying no, but in a good way. And then, yeah, that's everything for my presentation. So thank you very much for listening and thank you for your time. And I welcome any questions.
Serena, thank you very much indeed. I'll go back to the previous one because it's not going to start in a couple of minutes. I'll just go back to that one for you. We've had a new one on me and all the ones we've done because Serena's sales and marketing director is also watching today, and he's been answering the questions that have been asked.
Oh, has he? Oh, thank you. I did see some little things happening at the bottom, and I was...
Spencer, thank you very much, but not everyone can see the questions or answers, unfortunately. So we're going to have to go through them anyway. So I was trying to find his number to text him to say back off, but Spencer, but thank you anyway. He's now apologised to everybody, but that is a new one on me. But
he's just trying to be helpful. We're just trying to.
He's trying to be helpful. So I'm going to pop it. We've had a tremendous number of questions asked, which is fantastic. So Parminder has asked, "Hi Serena, do you accept directors that do not live in the UK and are not a UK citizen?"
No, well, I think it's got to be a bit more information to that. So if it's only them, no, because obviously the company needs to be registered in the UK. So if we're saying the company is in the UK, that's fine. But they're abroad, then we'll treat them as if they're British, as an... Was that the question? Or they're not a UK citizen?
The directors do not live in the UK and are not UK citizens. So foreign nationals, but it's a UK.
Yeah, so that would fall under the foreign national rules. So they would have to have one, the bank account and one buy-to-let for a year. So yes, but probably need a bit more info if you want to give that, and then I can give you a bit more detail.
Okay. Ketan has asked, what about gifts from friends? So the extended family bit. So
I like it, but I'm sorry, it's a no.
Yeah.
I hate saying no, not friends. It's got to be. It can be any family, extended family, but sorry, no, not
second
friends.
cousin twice removed.
Yeah.
Etc. Etc.
Yeah. Are they like family? Are they close like family?
Possibly. My best friend's like family to me. So only since I was a little kid. He's more of a brother to me than my brother is. So anyway, we'll have to leave that one. Ketan's also asked, what about loans from friends or landlords to help with the deposit, or even a gift or discount from the landlord to help with the deposit?
We would need to know more. So I think we should know all the detail, but I think, we have to consider the risk on that. So I would get in touch with me or Tony, and we can give you a bit more detail on that.
Ketan, tell you what to do. I'll give you my mobile number, and anyone can take this if you want it. Don't bombard me with calls in the middle of the night, please. But if you want to write this down, 07590 98 7000. Give me a call once we're done today, and I can run through, because obviously I know the finer points of the criteria. I don't want to hold up today's presentation too much. Preet has asked, would you lend on a 7-bed HMO? I'll answer that one, Serena. Yes, that goes in the specialist product, anything between 7 and 12. Mike has asked, I have 2 clients who are the only 2 directors of a limited company that they own buy-to-let properties through. They each own 26% of the shares. The other 48% are owned by up to 20 other people. Would you consider them for buy-to-let mortgages?
They've got 46%.
They've got 26 each. They've got 52% between them. The other 48 is owned by others.
I think we can take a view on that. So again, we can take a view on that.
Yeah, that's definitely doable, Mike, by the way, because we've had one very, very similar, which I'll talk to you about a little bit later, talk to everyone about a little bit later, which was quite a similar situation. Do you do exempt properties with vulnerable tenants? That is a yes. It depends if you mean vulnerable tenants or regulated tenancies. That's how I first read that. But vulnerable tenants, yes, you would, Serena. That's correct, isn't it?
Yeah.
So I just need to ask if there's any more. So I'm now just scrolling through Spencer's replies. So thanks, Spencer, by the way. It's nice to see. Preet has said, will you do joint borrower sole proprietor on a buy-to-let purchase? Which Spencer's actually said, afraid not. But
no, that's a no. Sorry.
But then it's based on a rental anyway. So, but anyway, again, Preet, maybe contact me on that, and just so I can know the circumstances. If it's one that Quantum can't do, I think we've got a home for that elsewhere. So, I'm just still going through. And then Marcus said, what loan to value for vulnerable tenants, please?
The vulnerable tenants, loan to value is not based the fact of vulnerable tenants, it's a property. So if it was a single unit, up to 80%, if it was going to the specialist range, 70%. So it's actually the property that defines the LTV, not the vulnerable tenants.
Okay. Colin Taylor said, hi, Colin, how are you? Vulnerable tenants, max, you will allow 3 in main house and 1 in attached annex, all registered with council.
Yeah, so if it's on one title, so again, I'll probably want to see the address to have a look at it, but in principle, yes, we would be happy to lend on that.
Okay, and Preet has asked if I can repeat my mobile number again, which actually my team's actually sent to us, so don't worry. Okay, we are out of time with Serena. Serena, that was fabulous. Thank you very, very much.
Thank you for having me.
Really was.
Thank you, everyone.
So Serena started with Quantum back, I think it was May, just after they first launched. And I know she's been watching our shows since then.
I have.
I didn't know she's going to be a bit nervous about today, but she came across as an absolute natural. So well done, Serena.
I love talking, Tony. I just love talking.
So I've heard.
Naturally to me. So thank you so much for having me. Really appreciate it. And obviously, thank you for all the questions. I would love to help where we can.
Okay, say everyone, fabulous product come out from Quantum. Just some of the stuff they're doing, no one else is doing. One thing I will say is the lending above commercial. You're probably all aware of lenders that say, yeah, we'll lend above commercial, but it's down to valuers' comments. Well, that's the stupidest bit of criteria you could ever imagine.
I know.
Because you could have 2 valuers going out from the same firm. One will say, yeah, it's fine. The other one will say, no, it's not.
That's so true.
The fact they've actually got criteria that is fixed. Yes, we will lend above commercial. Okay, in some circumstances, it's 65%. Others, it's 75%. But the fact that it's not down to valuers' comments is a major, major plus. So next one you got, and also think about all those studio flats under 30 square meters that you've come across in the past, not been out of place, because you now can. Okay, and don't forget we've got packager status, so you know what to do. Serena, thank you very much. Simon will remove you from the room. Don't do anything, because if you try and close your presentation down, you might close the whole thing down. So
I'm not going to touch anything.
I'm going to put the next lot of slides up. Our next speaker will hopefully appear shortly. I know he's here because I've seen him in the chat. It's George Tuffin from Roma Finance. Roma are our sponsors for today. George was a very, very late substitute for one of the directors who normally speaks at our shows. So I've not actually spoken to George before, and I've not actually seen him before, but I'm going to see him hopefully in a second. And there he is. George, how are you? Can you hear us?
I can hear you loud and clear.
Fabulous. Right. Okay. I will crack on because we're about 3 minutes behind.
Cool.
Okay, so everyone, you should have received, if I press the button in the right way, you should have received this from us this morning, everybody. This is Roma's terms. It's just a 1-page document. So that has everything on there pretty much that you need. A little bit about George. George is Senior Business Development Manager for Roma Finance in the Northwest and North Wales. He has extensive knowledge and experience in the bridging and development industry, working across brokerages before joining Roma over 4 years ago. He is dedicated to providing support and tailored solutions to Roma partners. With a wide range of experience, he knows the importance of understanding the borrower's needs and what they are trying to achieve, and structure loans that are mutually beneficial. George's interesting fact, George enjoys drifting in his spare time in a car he built himself. Okay, explain more, please.
So I think probably got into drifting from 2013 after seeing a lot of it on more sort of smaller things on like YouTube in Japan and all that sort of stuff. But yeah, then generally always like to take things apart, try to put them back together with the same amount of bits. And yeah, ended up fully taking apart a car and building it specifically for drifting.
Okay. My experience of drifting is going around corners too fast sometimes, and that's about it. So
yeah, exactly.
My age now, it frightens the life out of me, so I don't do anything like that. George, it's over to you. I'll see you in about 20-ish minutes. Okay, good luck.
Thank you very much. Hi, everyone. Thank you very much. So what I want to basically highlight is what we look at Roma from a bridging and refurb perspective. We do offer buy-to-lets as well, but we're not covering those today. So a little bit about Roma. We've been going over 10 years, primarily in the short-term bridging refurb development space. We generally look at things differently to the market of how bridging could be. Now, bridging is a term that, probably still seen as and deemed as quite a bad or naughty thing. There's good lenders out there, there's bad lenders out there. I've been at Roma for 4 years, and there's a reason that I'm still here. I generally believe in the way we lend. So here we obviously tagged it with, lending less ordinary. So Roma Finance offer competitive short, medium-term development commercial buy-to-let solutions. And we try to understand that every application is different. it's never just this loan sort of fits into this box or this bridge fits into this box, especially for what we're doing in the refurb sector and that sort of thing. Main sort of important things with it, not just us, but for other lenders as well, especially, the past 3 years has taught us this, that funding for that lender is more key than ever before. So with Roma, we actually have 8 funding lines, and they're all institutionally based from mainstream banks and all that sort of thing. So that gives us the availability to make sure that your customer is, going to get their money, not just day one, but obviously 6 months down the road, 10 months down the road. And we have exceptional people working in empowered culture. Roma's the only real place where salespeople, underwriters, customer services can feed back to senior management, and we can actually take into account, feedback we've had from customers, make changes to products, processes, all for the better. I think one of the key things that I'll probably mention quite a few times is, we genuinely put the person before the property. Something how the market reacts differently is there's a lot of lenders out there, a hell of a lot of bridging lenders out there, but a lot of them will focus more on how much the property is worth, how little the customer wants against it, worst case scenario, and if the loan goes bad, they can always repossess the property. That's not something where we like to operate in, which we'll come on to later. Now, as I mentioned, obviously we put the person before the property. The main thing with any sort of bridging, if you are looking to place it, whether it's with us or someone else, is you understand the borrower and what they're looking to do in the story. So the sorts of questions that we might be asking to our customers and that sort of thing is, what's the customer's motivation for doing this? Are they in this space already? Is it something that they've done already? Do they have experience and all these sorts of things? More so in regards to costs, timescales, or can they be realistic, especially with external influences and factors that are happening at the moment. Inflation's pushing everything up. Now that's affecting build costs, is affecting, completion of properties, GDVs and loan to cost that you would normally have standard restrictions. Each lender might have that differently. Costs may go up throughout the project. And if you don't have a customer or a lender that's built in contingency to that to provide it, the project won't ever get complete. If the project doesn't become complete, then the customer doesn't get their profit. And we're very much here to help people create wealth through property. So anything that they're looking to do, 99.9% of the loans that we write, people are creating wealth, whether it's for them directly, their family, retirement planning, or something to pass on to their children. The last sort of bullet point there would be looking at, how do they intend to exit? Whether it's with us or someone else. Tony mentioned previous to this, I actually brokered in the specialist market for another 6 years. It's where I sort of first dipped into specialist finance after sort of playing rugby. Always specialist, but it was mainly regulated second charge and that sort of stuff. So markets, products on the market are changing constantly. The good thing is that everyone at Roma kind of has a good idea of what's available in the market. So if it isn't with us, we may have another option for exiting. Just again there, obviously, the way we look at it is we underwrite the person before the property, which means that we can make lending decisions where others can't. So I had a case that came through when I first started. I was probably only 6 months into it. Refurb case came through for a conversion of an old restaurant, probably 1700s. Half of it was to retain a restaurant, and the rest of it was to be converted into 3 units. Previous to being a restaurant, it was actually a school. So spoke to the broker, really nice guy. The pack came in, we then passed it into underwriting. Underwriting did their checks as we do, land registry, restrictions on title, all that sort of stuff. And lo and behold, given the age of the property, there was a number of restrictions that came back on the title. There were archaeological restrictions across the whole thing, which basically meant at any time, external people could come in and start digging up the site, which is obviously going to devalue our site and make things harder to get a finished product. Now, this was a real stick in the road where at that point, we were not looking to be able to lend on that just because of the archaeological restrictions. Now, because Roma, we're probably it's 42 people, and we're very open in regards to communication. you know, we can pick up the phone to someone, turn around at the desk, and at this instance, I turned around on my desk and said, you know, I was speaking to the introducer. This is, you know, he says that this is something that we should be doing business with. So we took a view, and within 10 minutes, we were all around the phone. It was the MD, the underwriter, myself, another underwriter, and the head of sales, and we had the customer and the broker on the line. And we obviously talked through, in the space of about 10 minutes, what our concerns were. After that 10-minute period, everyone was nodding their heads. Reason for that is, you know, the customer had provided answers to everything that we needed, and clearly had the experience and the drive to do this. So we chose to back that customer and put that person before the issues with the property. Coincidentally, that customer's retained with Roma, and I think they're on their 6th deal now. And, you know, that's one of the biggest things that we look to do. So I want to talk a little bit about contingency and exit. I mentioned that costs are going up and all that sort of thing. So if you are looking at bridging cases, lenders will be more sort of focusing on contingency and exiting, especially if there's an element of refurb. Serena mentioned a lot with, you know, changes in EPCs, and so did Tony. We're doing a hell of a lot of that stuff at the moment. You know, anyone that has an existing sort of buy-to-let mortgage at the moment will probably do like a refurbishment bridge, pay that off, the existing charge. Money for refurbishments, they may wish to add bedrooms to the property, upgrade the EPC, and then put it back on term. So with the changes of, you know, interest rates, inflation, and that sort of stuff, what we're looking to see on bigger sort of, I'll probably say light, medium, heavy, and development projects is some element of contingency. Now, this is going to be, you know, 10 to 15% in the budget on the works, and the cost of the works. So, you know, if they've got 300 grand there, we'd like to see a little bit of a buffer. We'll look to, although we don't really focus on having you provide evidence of the exit day one with submission of the pack, we would like to see that there's an exit in place within sort of 3 months of the end of the term of the loan. Just because if there isn't, and we're coming up to sort of the end of the term, the main thing with any sort of bridge is, regardless of price and what they're looking to do, is that product has a finite term, and you want the customer to basically be well within their comfortability, as well as the lender, that, you know, you're not waiting all the way up to, let's say, month 12. The customer's got to pay back the next month, and you've got nothing there. You know, we'll kind of be in touch with the customer as well, but it's good for you to also be in touch with your customer. Another thing we were looking at is whether it's, you know, the customer is experienced directly themselves, and they may not be, but they'll need to have, you know, an experienced team behind them if they were a first timer, that sort of stuff. We do lend to first timers, but we just want to see that someone in the chain holds the experience. So we obviously want to try and help our customers as much as possible. So what we'll look to do is rebate up to 3 months interest back on loans that redeem early. So, you know, let's take a 12-month term, for example. The customer, let's say the customer's cracked on, got everything done, got their refinance sorted, and obviously exited before that 12 months. You know, what we're more than happy to do is only actually charge the customer for how much they use and how long they utilize our funds. What they also get at Roma is a named contact for support internal in the office. You know, it's kind of one of those things that, you know, especially with more people working remotely and that sort of stuff, that it's hard to get through to the people that make decisions and hold up, you know, advice on the account. So they'll actually have a dedicated person for in customer services, and you know, we might go out to site. So I cover, as you may tell from my accent, the Northwest. We're based in Manchester, but lend all over. So whether I'll be seeing introducers in the Northwest and North Wales, I may go and see site visits and obviously build up relations with the customer, which I can then pass back into introducers. What we can also do is look at providing the exit if needed. So obviously we do our ground up and refurb stuff, but we also look at 5-year buy-to-let mortgages out the back end if people need it. So products could they go through? We have our sort of suite of products. We've got residential bridging finance, semi-commercial stuff, auction, refurbishment finance, development finance, and as I mentioned, the buy-to-let and holiday stuff. So one of the main things that we'll talk about is Roma flow. So Roma flow is our minimal packaging required, fast transacting standard bridges. So where customers are basically looking to use our money to make money, these can be standard purchases or light refurbs. Main things that make it quick, we use electronically signed signatures, ID and bank statements are done by Credas and open banking. If we can utilize a home track mortgage, home track valuation report, we'll do that. If we're also looking at refurb, as long as it's below sort of 50% of the value of the property and works, we'll still consider that light. Your solicitors are instructed within 24 hours. You get your dedicated underwriter and case processor, which you can then have a direct line to call them up, discuss anything that needs to be discussed. Now, with this, even with timescales, if you have to do a full inspection, 80% of those cases are completing within 28 days. So criteria, probably one of the main sort of slides to focus on, really. Rates-wise, start at 0.59 and go up from there, depending on what the customer's looking to do and that sort of thing. We'll lend in England, Wales, and Scotland. We'll look at residential, HMO, semi-commercial, commercial properties. Auction, we can do on a home track for cost of evaluation. It's like 30 quid. Again, provide pre-auction AIPs valued up, ready to go. We can lend up to 75% of residential, 70% on semi-commercial, 65% on commercial, or 100% or more with additional security. We'll look to provide developer exit products on properties that are wind and water tight. So, let's say one of your customers that might have come to you, they've had issues with a development given COVID timescales extending. What we can actually do is pay off the existing lender that may be on there and help them actually rectify the property and get it completed. One thing that helps us complete quickly and is good for your customer, if the customer's not going up or out on the property, we'll only ask 7 to 8 questions when it comes to legals. There's no searches or that sort of stuff. Now, that means a standardized title insured policy that a good solicitor can get that done in an afternoon if they are free. Development, we'll look at, when we talk development, it's always out the ground. Anything else would be a refurbishment or a conversion, that sort of thing. So we'll look at rates are slightly higher given it's out the ground. Again, no restriction, England, Wales, Scotland from where we look at. We can look up to 12 units as a new build. We want them really in phased builds. We'll look at modern methods of construction. And there's a case study that I'll mention in a sec that basically, look at that. One of the only real lenders looking at newer type modern construction methods. So this was a refurbishment. Actually, one of mine in Stockport was a customer that was typical builder, and you haven't really utilised funding before. It was new to bridging and that sort of thing, but realistically had done this time and time before. So he was actually buying, in the nicest way possible, a messed about property, which was sort of this top left picture. He was planning to buy it and drop the left side of it, and then basically create 2 semi-detached properties, which he did. We only actually helped out with the purchase. Now, you can see from the pictures, he basically went through the whole property. This guy did the interior design as well. And when you'd meet him, typical builder, you wouldn't really think his key would be interior design, but it really was. We ended up growing a really good relationship with this customer, and he's probably on his 4th deal at the moment. Now, the best thing about that is we actually pass that to you. So because we're going out to site, meeting customers, you generally build up a rapport. But obviously we kept the introducer in the loop for this one as well. Now, for this one, this was actually a few years ago now, but it was really good. So the customer owned downstairs, which was barbershop, that sort of thing. He was converting that and obviously updating it and that sort of thing, but had an opportunity to buy the flat upstairs. So what we did, we offered him 100% funding. He bought upstairs, converted it, and basically it downvalued the flat upstairs, downvalued on the initial purchase. But because we're providing funds with additional security, we raised up and obviously focused to try and get 100% for him because he was still completing that quickly. Now, this one, again, more sort of talking about, you know, issues that can happen and what we've seen, and this is all still valid. So with this one, this was slowed down because of the pandemic. And, you know, we have a borrower that was fairly inexperienced, but they had an experienced team. They had a substantial garden into the rear of the property. What they ended up doing was getting planning for a nice new modern house, single build, separate access, all that sort of stuff. So the customer didn't really have direct experience, but what they did have was support from a very, very good builder. Now, we were able to take a view on that, where we were still happy to lend to that customer who was inexperienced, but they had the experience of the builder. We provided 100% of the build costs. What we also did is, because they owned that land already, we forward funded it. So we gave them the first chunk of money, and they then came back, and obviously we did the rest in stages. But with this one, this went over from and had issues with supply and that sort of thing because of COVID. Now, the main issue with this was it was just a slowdown in materials and obviously getting people to site. Now, because of that, and you probably got a bit of a flavour that we do a lot of refurb and all that sort of stuff. We made the decision over COVID to basically stop lending on new business for 2 weeks. So we focused on what was in the WIP and what was in work in progress, what was already completing, because these customers had, you know, committed to buying these properties already. Now, everyone that was already on a loan with us, we offered all of them COVID-free extensions, because realistically, you know, it wasn't their fault that they couldn't get people to site, couldn't get materials to site. So we ended up offering them extensions. And the last COVID extension actually completed like 24th of December 2020. And everyone exited cleanly, which was the main thing. This was a case study of a build that we did up in Scotland. This one was, you may see more of this type of construction, but there's not many lenders that all focus on modern types and eco houses, because they don't quite understand it at the moment. Roma is very much focused on this at the moment, and one of the only lenders that will really touch this sort of stuff. The issues sort of with this property, which we liked, were, you know, experienced customers looking to provide sustainable housing, and we're very much into providing sustainability in this market. These were super ultra high modern, super efficient houses. You know, they had EPCs of like A+, and they were just really, really good quality. So they had sort of high levels of air tightness, and there was mechanical cooling and heating. Solar was in the property to basically prevent like shading and overheating on the property. What it also was doing was converting that back into electricity. There were boreholes around the site, which provided you know, heat and gas heat and all that sort of stuff. And they were obviously highly insulated. Now with these, we're going to see more and more of these builds happen. And at the moment, there's not many lenders that will look at them. So if you do have sort of anything that comes to that base, do let us know. If anyone's got any questions, please let us know.
George, great presentation. Thank you very much.
Thank
We've
you.
got one question from Arshad, which is, hi, George, could you clarify if you provide a 5-year term buy-to-let at the end of the bridge term in case the client needs to convert to a buy-to-let?
Yeah, exactly. That's what we'll do, Arshad. So through that sort of suite of products, we can help with the whole journey of what a customer may go through. So they can purchase a piece of land with planning, for example. We can help them build it out of the ground, get it wind and watertight, put it onto cheaper money, which is a bridge, pass the saving back onto the customer, and then once it's ready to be income producing, put it onto a 5-year buy-to-let. Now, what we'll also do on that 5-year buy-to-let is let them capital raise back up to 75%, pull money out, and then be able to go again. So you start creating this cycle for the customer that they can basically use our products to create portfolios.
Okay, and one of the things I'll be covering a little bit later on is that I'm not sure if Roma's buy-to-let product appears on any of the sourcing, like the mortgage brains and the tri-goals and the 27 techs. It does appear on ours that we have that on there, so we can quote that literally on day one what the bridge will be, because we can quote on the bridge as well. with our software, and also quote on the term as well. So but I'll cover that a little bit later. Katan has said, do you lend on land without planning?
So if it's just a piece of land and there's no planning on it, we won't. We'd ideally want additional security. If the land has planning, you can go up to 55%.
Okay. Ketan, we do have, by the way, lenders that will lend on land without planning, not to take it away from Roma, but it's not something they do anyway. But there are lenders that we've got out there that will do that. But there you go. So that one's answered. I'm going to go to the questions. I'm not sure, George, if you set these questions or your colleagues set them, because you were such a late substitute. So forgive me if I ask you a question, you go, oh, how am I supposed to know that? What do you think the market will do in the next 18 months? What is going to be big in the short-term world?
So I think at the moment, the next 18 months are going to be really trying for a lot of lenders. I think it's going to be similar to, especially in the bridging market, similar to what we saw at the start of 2020, where there will be lenders that don't have the necessary funding to be able to get projects continued. And I think there'll be nervousness with the economy. But as we've always seen through everything, the bridging and development market will still be worth billions of pounds. It's a small island, large population, still not enough housing. We'll have to look at easier methods of construction, eco houses, new building materials, airspace, especially in sort of the more populated areas. There's more airspace and people going up more than ever because obviously there's no ground level stuff, but people still want to live there. So I think, it'll still be strong, but we may see a few more lenders drop out of the market.
Okay. One thing I would add to that is my belief is that, as we know, things are going to change over the next 18 months, potentially a recession, not too bad, we would hope. Lenders are a lot better funded these days, a lot stronger than they were back in 2007, 2008. Just be careful on the bridging side who you partner with. Because there's some lenders out there, I'm not going to say all of them, but some lenders within the peer-to-peer market, for example, whose margins are so thin, they rely on those clients that go over terms so they can start putting penalty interest on them. But you could potentially see a few of those going, and we avoid them like the plague. Just so be very careful who you partner with. We're incredibly careful who we partner with on the bridging side. And there's hundreds of bridging lenders out there, literally hundreds upon hundreds and hundreds. We ensure that they are properly funded. We ensure that they're going to be here to stay. What we don't want is to take on a lender who 6 months later is like saying, sorry guys, a Lendy type situation, if those you remember Lendy. So just be very, very careful who you partner with. George, how much time will electronic signatures save with applications?
Probably only actually about 10 minutes. But I think it's going to be the simplicity and the availability for customers to get that. Because, instead of having to print off a document, sign it, scan it back in, it's not a long process, but it's just a journey of doing it, where they can literally click onto something and go through the portal, get everything sorted. It's invaluable. You're not having then to wait for the post or that sort of thing. You just got verified documentation straight away.
One final question, then we'll go to the break. Can you explain your refurbishment model in more detail? Why is it different to others?
So it's very much different in the market, and more so for how we class light, medium, heavy. So you might find that a lot of lenders class the cost of works against, if it's light, medium, heavy, slightly different. For us, anything up to 50% of the value of the property and works will class as light. 50 to 100 is medium, and anything where costs exceed 100% of the value of the property we class as heavy. So that means, if you've got a property worth 300 grand, and we've got 100, 150, 140, 150 in build costs, which is a hell of a lot of money, we'll still class that as live.
Okay, brilliant. There's no more questions. George, thank you very, very much for stepping in at such late notice.
My pleasure.
I thought that was excellent again. We thought you had a pet woodpecker at some stage. There's a little tapping noise coming across, but we think it might be something attached to your desk or something.
It's probably my squeaky chair, Tony.
Oh, is he squeaky chair? Is it? There was a noise going off on occasion. I thought, does he really have a pet woodpecker? Surely not. But George, thank you very much. My team will take you out of the room, and we'll see you again soon. My next speaker is Matt Yates, our specialist account manager, special finance account manager from InterBay. And you should have received this on your email today. And there comes Matt. You should receive this on email today. If you haven't, again, just contact the team. They'll get it out to you. So Matt's going to appear. And there's Matt. Can you hear us, Matt?
I can. Can you hear me?
Hear you absolutely perfectly, loud and clear. Right, okay. A little bit on Matt, first of all. He's been working in the industry with the mortgage industry since 2005, starting with just one account. He helped start up RBSIP, which later became NatWest Intermediary Solutions. Matt progressed to a field sales position with Platform, then moved on to Precise Mortgages. Matt took the opportunity to take a sidestep to InterBay in October last year and is currently working as a specialist finance account manager whilst continuing to help brokers with Precise Bridging Finance. His interesting fact, I love this. Matt used to break dance in the 1980s and danced on a London stage, BBC TV, as well as a number of seasons at Pontins. He will not be break dancing today. You'll be pleased to hear.
No,
he'll probably break something. That's probably the reason why. But Matt, it's over to you. I'll see you in 20 minutes.
Thank you, Tony. Always a nice introduction there, and good morning to one and all. I was very fortunate to listen to the back end of the last presentation. So there's some hard shoes to fill, but I will be talking about different things. I'll be talking about the commercial side of my proposition this morning, and the kind of examples that I'm talking to other brokers about, and the kind of examples I'm talking to Tony's team about, and how I can help the brokers' inquiries that they get. And it's a very varied picture in the commercial sector at the moment, still extremely strong. And there's some very good opportunities out there. But similar to the questions on the back end of the Roma presentation about the future, what does it look like, etc. And it's so hard to tell. But there's always interest in bricks and mortar, whether it's to live in or to invest in. And I've seen this since I've moved over to InterBay from last year, about the strength of the commercial market and how brokers and landlords are looking to move into that world. And I'll come on a little bit more about that later on. So let me just want to start with this slide here. This is for some of you who may or may not know the position of InterBay and the bigger business. We're part of a three-lender family, if you like. So we have one savings bank, who is the biggest part of the business, and within that you've got Precise Mortgages, Kent Reliance, and InterBay. And I know that you would have been more than familiar with those lenders and used them, but that's just to give you a bit of context. So with Precise, that's going to be buy-to-let, residential, etc. The Kent Reliance model is going to be the stuff that Precise can't do, so the bigger buy-to-lets, slightly more complicated. And in InterBay, you've got the commercial side. But there's also some other areas of complex buy-to-let and bridging, bridging through Precise, actually, sorry. But I'm not going to go into them today. Today is pretty much just going to be focused on the commercial side of my offering, excuse me. And just to give you some examples of what landlords are thinking about and what they're wanting to do now. And that'll give you some idea of when you speak to your landlords about options they might have in the marketplace that can become a reality with lenders like InterBay and some of my competitors, with how we can help. So we shall move on. Okay, there's just going to be a few slides. It's a bit of a watered down presentation in regards that my presentation usually covers the buy-to-let, the commercial, holiday let and things like that. But as I say, today I'm just going to focus on the commercial. The two areas are going to be the bits on the left. How can your landlords utilise InterBay for their commercial mortgage requirements? What's the difference between commercial and semi-commercial? What are landlords focusing on? Is it more commercial? Is it semi-commercial? What's easiest? What's more cost efficient, etc.? We'll try and cover those areas off today. Okay, so just starting off with commercial. What is commercial? Now, you can see from the use on the side there, you've got, it basically boils down just to a few areas of what the property can be used for. There's an awful lot of retail out there that is still in use. There's an awful lot of retail that is not in use, and that's a challenge. There's only a couple of areas within my commercial proposition that we're going to be quite cautious on. And I think you'd all agree that these two areas might have had a bit of a tough time. So it's going to be retail and office space. So while I'm not going to go on too much about what we can't do, it's just word of warning about how the market is at the moment, because you walk down any high street, whether it's a large town or a city centre, there's going to be very, very sort of empty properties. There's going to be varied empty properties. Some of them big, some of them are small. So I live in Norwich, for example, and in Norwich, you've got a massive Debenhams and a massive Topshop, really big retail space, and they've been empty for the last 6 months. You know, are we going to lend on something like that? No, don't think we will do. However, retail that has got a long-standing tenant in, and they've weathered the storm through COVID, and they've got a good lease in place, absolutely, that's something we can work on. So while retail is going to be a very cautious area for us, and also some of my competitors, let's not dismiss anything until you've spoken to Joe or the team at Tony about the kind of options that they can give you. Local convenience stores, they're pretty good actually, because if you think about it, anything that's done very well over the COVID period and the lockdown period, because convenience stores, takeaways, the kind of off-licensed businesses have seemed to have done quite well. We are going to be looking to lend on those types of properties and buildings because they've weathered the storm, so to speak. General retail, we'd have to look just to see if it's empty or whether there's going to be a tenant in place on completion. How does that lease look like? So here's a bit of a tip when you speak to your landlords in regards to commercial, whether it's commercial, semi-commercial. What is the current lease? If the lease is ongoing for at least 12 months at time of application, we can look at it. Coupled with that, is it a new tenant? Is it an existing tenant? We'll have comfort to do a purchase or remortgage of a property where there's been a tenant in place for a while, at least a couple of years, and there's at least a year left on the lease. A good lease is around 5, 7 or 10 years, to be honest. In retail, you generally don't see that. It's more the big commercial out of town places. But talk to Joe and the team about it. There's always a home for certain properties. Today is more about the kind of appetite InterBay have got. The second area I'd like to add a bit of caution to is offices. If you can picture in your mind the big old office blocks where you've got multiple businesses within. So it's not where you've got a massive insurance company and they're all in there, etc. Well, they might be looking to go sort of out of town like they are in Norwich at the moment. But if you've got a building with multiple businesses in, we are finding at the moment that due to the change of working patterns, a lot of those units might be empty. There's going to be a bit of caution about that. Now, they're very good yield opportunities with office space. But again, if a proposition comes to me where it's an office space, is it fully tenanted? What do the leases look like? Again, in office space, you will find very short leases or rolling leases. Again, we might be able to accommodate a rolling lease if they've been in there a long time, because that gives us a track record of how long they're going to stay, really. Okay, so not to dismiss these two areas, but just be cautious in regards to them, because a lot of lenders, and us included, because of what's happened over the last 3 years or so, the retail and office space has taken a bit of hit. What do we really like? We really like industrial and commercial units. So let's just give you some examples. Think out of town. When you're driving out of town, you see all these big industrial parks or commercial parks where you've got multiple businesses there. They're great. Those big buildings, the bigger the better for us. And I'll come on to the criteria about loan size, etc. But that's something that we really like, because that seems to be where businesses are wanting to firm up and cement where they work from. The leases are generally quite long as well. Just going back a step, actually, back to the high street on this list, food and drink. Brilliant. Takeaways and restaurants. Show me a kebab house with a flat above it or not a flat above it all day long. Okay. They have a good business there. They've done very well and they'll probably be on a good lease. So takeaways and restaurants, we're great. And obviously something of a professional standard like doctor surgery, dentist surgery and pharmacy, absolutely. That's going to be something that's going to give us a bit of comfort, because everyone needs a doctor and a dentist. There's not enough of them about, let's be honest. So if they've got a good business, if they've been there a while, or even if it's a new tenant coming in, They're the type of properties that we want to lend on. Worth noting at this point, actually, in regards to owner-occupier. In fact, we'll go to the next slide. It might be on there. Yeah, okay. So just to round off some examples in regards to our criteria and how it would look to your clients. So I'm going to skip to the bit where it says investor or owner-occupier. If you come to me with a purchase of a property and you have, let's just say, a hairdresser, and I've got a couple of these on the go at the moment, a hairdresser who's been renting their property for a good few years. They've done all right over the last couple of years. The freehold has now come up to purchase. They've done the maths, and getting a mortgage and the mortgage payments is much more cost effective than continuing to pay rent. And they've got some money in their business that they can use to put down as a deposit. Brilliant. As long as we've got 1 year's trading, which shows some good net profits in there, happy for that customer with no letting experience in the background, because they're going to be the owners and the occupiers. That's something we can help with. Owner-occupier. This seems to be a big thing at the moment for businesses taking the opportunity to own the building. It's a good asset. Even better is if that hairdresser's has got a flat above it, there's a bit of income there. So you've got the income from the rent, the income from the tenant upstairs, plus you're going to be saving, or the landlord's going to be saving against the rent. Really good opportunities. We're starting to see a lot more of them now as well. Chuck a bit of criteria out there for you. Commercial and semi-commercial, 75% loan to value of its current valuation. We'll obviously do get a valuer to the property as well. And that's quite good, especially on commercial. A lot of the business that I do on remortgage or purchase, 75% loan to value on interest only. Now I'll just go down to that interest only point, because this is where we get a lot of interest. Now I'm not 100% sure what the high street commercial lenders' appetite is at the moment, but historically they've never been too keen on interest only. They like owner occupier because they'll see it as a business transaction, but with interest only, it levies up a bit of extra funds for the customer and reduces the payments. We're happy at 75% on interest only for commercial properties. Bear that in mind when you're speaking to the landlords that haven't got as much deposit as they thought they needed. There are some lenders out there who'll only offer 70%, and some won't do interest only above 50. Okay, so that's a big draw for InterBay, and this is what I speak to Joe in the office about quite a lot, is the high loan to value stuff. Loan sizes, and I think our changes that were implemented in January are quite fair. So the minimum loan size is £50,000, but the minimum property value is 150. This is both for commercial and semi-commercial. Now, the reason we've set the minimum property value is there are an awful lot of commercial properties hovering around the £100,000 mark, and we don't really want an awful lot of them in our book. So I think this is to help people that are remortgaging. And since we've changed this earlier in the year, we've been very, very popular for the smaller loans. Again, a lot of my competitors, there's certain minimum loan sizes that they've implemented, but our minimum loan size is 50k is going to help that landlord remortgage a commercial property or semi-commercial property, draw out some funds. Now, drawing out some funds, like my sister companies, Precise Mortgages and Kent Reliance, you can pretty much borrow money for any reason. There's an awful lot of people wanting to capital raise to invest in new property, invest in, to pay off a residential mortgage. The other day, actually, they've done their maths and they can raise money from the investment property to pay off the mortgage because they think the interest rates are going to rise too much on the residential side. So any legal reason, and I must caveat legal reason. Okay, so I've done a lot of capital raising because I think this is in this current market. People are taking the opportunity, landlords are taking the opportunity for the increased value of properties to draw out as much as they can in preparation for a quick purchase. Because we all know on residential, and it's the same with commercial, if a property comes onto the market and it's a good proposition, it will go quickly. It doesn't matter whether it's semi-commercial, commercial or residential, it will go quickly. The better placed people are either going to be cash in the bank, which, let's be honest, is rare, or they'll go and do some bridging finance. The conversations I've been having are that landlords seem to be getting themselves prepared for when that perfect property comes into the market, they're cash ready. So capital raising for anything like that is absolutely fine. Now, just the last bit on commercial, you can see at the bottom there, for property values over 3 million, refer to, not me, but refer to Joe and the team. I can work with Joe and Tony on big deals. The biggest I've done to date at the moment is a £11.5 million semi-commercial out-of-town unit, and it was a whopper. Okay, absolutely something we're comfortable with. There's no maximum loan amount. I've done quite a few of these with the guys, and we've worked together quite closely with yourself and the landlord to ensure it's the right deal. So if it's a big property and your landlord has got experience of commercial, semi-commercial, they want to buy big, absolutely fine. What I have to do on behalf of Tony and Joe is obviously take it to my credit committee and make sure we're comfortable with it. But all of the legwork is done even before these guys put pen to paper on it. So minimum loan size, maximum loan size, yeah, anything nice, the bigger the better for all the reasons, okay? Just going to finish off with semi-commercial. As I said, there's not many slides today, but I'm not one for throwing loads of criteria at you. I like to talk about scenarios just to whet your appetite about what you can be talking to your landlords about. Now, the bit I want to focus on today is this is really our sweet spot for lending. So picture a high street or a town, and you've got a chip shop with a flat above it, a hairdresser, a flat above it, or maybe a couple of flats, bookies, potentially bookies with a flat above it, kebab house, anything like that, as long as it's on one freehold, is classed as a semi-commercial. Now, on this slide, it mentions about there's no split in the footprint. So what we can do is a very large commercial unit with a very small element of residential to it, and it will be classed as semi-commercial. It's a bit of a USP for us because there are a lot of lenders that will require a minimum residential space in relation to the commercial space. So it's rare, but you know, most of the semi-commercials are an office or a building with a flat or flats above it. That's it. But sometimes, and I've had a few of these, you've got a very large commercial element. Sometimes it goes to the rear, and there's extensions, and it's a big office, etc. But there's only one flat above. So the percentage might be only about 25% or something that's actually residential. Some lenders seem to have trouble with it. We don't. So again, just to be sure, speak to Joe, speak to Tony about the kind of properties they've got. If they're not sure whether they can get a mortgage, you know, those guys will speak to me and we'll look to help you with the deal on it. So what other examples of semi-commercial can I help with? Again, it's if you've got a retail unit or you've got an office space, yes, by itself, we're not going to be too keen. But if you've got a commercial space with a tenant, an office block, for example, or an office, or you've got a retail shop in there, the lease might not be too long. They might not have been in there they might have been there for 6 months or so. But if you've got a strong tenant on the residential aspect, and actually if the rent from the flat above can cover the loan amount, but you've still got a tenant on the commercial side, we'll be happy to consider that. What we're not keen on both semi-commercial and commercial, is vacant properties. Certain scenarios, please talk to Joe about it, in return she'll speak to me. Certain scenarios, we will be comfortable if it's a really high demand area. If it looks like through past transactions and the area as a whole, you could easily get a tenant in that commercial unit. But if your landlord's thinking of buying a property that is vacant and they don't really have plans to get someone in immediately, that's going to limit their opportunities with the lenders that they can use. For us, on completion, we need a tenant. We will need someone in place on a lease. So that's a really important part at the moment, because from the feedback I'm getting, there does seem to be an awful lot of vacant properties out there. Obviously, you know, the sign of the times at the moment. The freeholders probably struggling to get a tenant in place for their commercial unit, so they just thought, well, I'll just sell up. A good opportunity, because they'll probably come at a good price, but you're going to need to get a tenant in there to start servicing that rent for you. Okay, word of warning on it. I'm just going to briefly talk about the process, how it works for us. Okay, so what will happen is an AIP is issued. If you submit an application to us, it's an AIP, and the AIP is a general underwrite. Okay, so it's not an automatic credit score check. It actually goes to an underwriter, and what they'll do is they'll make sure it's a case we can do. Okay, and then they will issue terms, and there'll be an invite for the customer to pay for the valuation and the application fee of £145. Once we've got those fees, we'll instruct the valuation. Bearing in mind, the underwriter's already looked at it and thought, yeah, this is a case we can do. So subject to the documents coming in, and you're comfortable with the documents coming in and they mirror what's on the AIP, we're absolutely fine to go to offer on it. Now, at the moment, there is a bit of delay with some valuations in certain areas of the country. The commercial valuers are very much in demand at the moment. For the feedback I'm getting as well, it seems to be very similar with the residential areas, residential mortgages, and also solicitors. With solicitors, we've got a small panel, and we'll ask them to represent us. Probably best to do dual representation. So the process generally is a bit longer if you haven't done any commercial writing before. The process is generally longer, especially at the back end with the solicitors. So that's just something that it's very much mirrors, if you haven't done commercial mortgages before, it very much mirrors a normal buy-to-let processing schedule, if you like. It's just a little bit stretched, especially at the back end. Now, one thing I did want to sort of talk to you about is experience. So you might be thinking, Matt, I've got some landlords, they've got a couple of buy-to-lets. Could they just jump straight into a 10,000 square foot commercial unit on the outside of Milton Keynes? The answer is no. On criteria, we do actually ask that the applicant has relevant commercial experience. Now, if you've got a semi-commercial and you've got very strong rent from the flat above, and there's also some rent from the commercial, we'd be happy to look at that with someone that's got at least a buy-to-let. That's something for you to talk to Joe about, obviously, because criteria can be a bit flexible depending on the strength of the case. However, reality would kick in to say, if someone's only got a one-bedroom flat and they all of a sudden want to jump to a very large commercial unit, industrial unit, they're not quite there. We don't want them to run before they can walk. Applications can be done by a limited company, trading company, or personal name. And they can also be done through pensions as well. Okay, SIPs and SASs, I believe. Okay, there's a loan to value maximum on that. So this is where the speciality of InterBay comes in. So yes, we'll do all the types of property that we've talked about to good loan to values on interest only, but we'll do it in different ways in which they want to purchase it. Okay, so these are all things to think about when you're speaking to Joe and the team, and in turn, we'll have a good conversation about it. There's lots of flexibility there, but you'd need very much to talk to the team to make sure it's the right lender it's going to go to, and hopefully that will be InterBay. Okay, on that note, Tony's popped up on my screen.
I have.
Excellent.
You've got one more slide, but I can't see what the slide is. So
it's the packaging side to it, and to be honest, I don't think we need to go through the packaging at this stage. This is more, I'm much more interested in talking about scenarios and how your brokers can leverage landlords' interest in commercial. Okay,
I'll go back to that slide, Matt, just so then we can see what the process is. You've got 4 questions.
Excellent.
Apologies, because I've got a guy delivering some materials to my house who doesn't understand the words left and right. And
okay.
He's now phoned me 3 times in the last 5 minutes. And I've told him to ask somebody that he sees on the street. Andrew Wall has asked, will you lend on an industrial business park where all units are let on 2 to 5 year licenses? LTV is 35%.
Licenses are very similar to leases. But yeah, that again, going back to the presentation, that's a very strong area for us. They're obviously tied in for some considerable time. I need to know a little bit more details about the licenses, but from previous cases, leases and licenses tend to be very similar, so we should be strong for that. Even better if the tenants have been in there a little while, so we've got some business trading. But yeah, absolutely, 75% interest only if you want, happy to consider.
Okay, and he needs 35. But Andrew, we need to do just speak with my head of commercial, Joe Locke, who's awaiting your call. So Arshad had asked, hi Matt, is the 75% LTV based on open market value or 180-day value?
This is a question and a half. One thing that's absolutely thrown me when I moved over to InterBay is the different abbreviations for valuations. So it's going to be the open market value or investment value for commercial, the investment value of the building. Okay, there's 90-day, 180-day market value. There's lots of different abbreviations there, but the best way to look at it with commercial, the investment value of the building is what the valuer will put down on the report, and that's what we'll use. Okay.
Okay. Sadia has asked, in the semi-commercial retail, does the upstairs have to be rented out at the point you value it, or will the provisional rent be taken into account?
Going back to what I said earlier on in regards to what we need to see on completion, we need a tenant to be in place on completion. If we're going to take that rent into consideration, we really want to know someone's going to be in there, because the landlord might be comfortable enough just to leave the commercial tenant to carry on and pay the rent, but upstairs being vacant. As I mentioned earlier on, we're not massively keen on any part of a property being vacant. So just to reiterate, on the commercial side or the residential element to it above, both need to be occupied, tenanted on completion, and we'd need details of that. Ideally, before offer, we can potentially make it condition of offer if you're ironing out some finer details. I hope that makes sense.
If you've got a situation where, for example, we've done this before, where someone's buying a property and they want to do, give it a lick of paint once they've actually taken possession of the property, and but they've got a tenant lined up, deposit paid, for example.
Perfect.
Then you're absolutely fine. In those sort of situations, we'll get those through, because the tenant's about to move in, and within 30 days the property is going to be tenanted, we know the property will be tenanted, but it just needs to be smartened up, then that's not an issue.
Absolutely.
With more questions coming. Arshad's asked, what's the max LTV on investment property semi-commercial for a first-time investor?
Can't do it for a first-time investor. As I mentioned, you need the landlord to do a commercial or to do a commercial, I'd need the landlord to be experienced in commercial ownership, commercial property ownership. For a semi-commercial, we would be happy with a landlord just having a buy-to-let or a couple of buy-to-lets their name. Was there a loan to value in there? I think there was.
If it's a commercial property, though, if you've got somebody who owns semi-commercial properties, presume obviously that's okay.
Oh, so, absolutely.
Okay. Last question we got from Rakesh is, do you lend on semi-commercial investment? It's a laundrette with a flat above.
Yes, we can, as long as there's no dry cleaning facilities. Bit of a fire hazard, not keen on them. So standard laundrette with a flat above it, no problem.
Okay. Rakesh, just so you know, we do have facilities. Laundrettes are always difficult. Dry cleaners are always difficult because of the chemicals. We do have some sources for that, but they are potentially very difficult, unfortunately. That's us done, Matt. Perfect. We're just bang on time. Thank you very much as always. Look forward to seeing you soon. I think you're coming to the office fairly soon, so we'll catch up then. Team will remove you from the room, and well done for doing. Oh, actually, there's one more thing I'm just going to add, everybody. This is absolutely vital. One of the things I realised very early, just after InterBay launched back in 2012, I think it was, when we started to see commercial lenders come back in. Get your name out there. So, for example, something I do now, I'm a bit of a tart when it comes to getting my hair cut, because I don't stay loyal to one hairdresser. The reason why is I'll go and see. I'll start with one. They say, you sit in there. They say, what do you do for a living? Oh, I'm a commercial mortgage broker. I help people buy property. You wouldn't believe how many hairdressers we've actually helped to buy the freehold of their property.
Exactly.
Within Berkhamsted. And that's only a small town. Just get your name out there. Let people know you can do commercial finance. You will be amazed at how many are saying, oh, I've been to my bank and they turned me down. I didn't think I could get anything. Oh, guess what? We've got lenders that can, just like InterBay. So I've got several InterBay clients with InterBay who've cut my hair in the past. Get your name out there. Seriously, it works. Really works well.
No, absolutely. I echo that. Absolutely echo it. Thanks again.
Matt, thank you very much. Simon will remove you from the room, and we will crack on to the next one.
Enjoy the day.
Thanks, Matt.
Pleasure.
Our final lender presentation is Anna Oades from United Trust Bank. You would receive 3 items from Hannah. Hannah, can you hear us?
Yes, I can indeed. Can you hear
I
me?
hear you perfectly. I can't believe everything's gone swimmingly so far.
Don't say that.
Or touch some plastic thingy. Everything's gone absolutely fine so far. So I will just do your little introduction. No, that's gone way too far. Is that you doing that, or is that me?
Oh, that was me. Sorry.
That was you, right? Okay, it's not my clicker. Right, I'll go back. Right, don't touch anything yet. Okay, little introduction on Hannah. She began her mortgage journey at 27 Tech HQ in the lender team. She was later recruited by UTB to develop their first charge proposition and expand their distribution, which brings them nicely to where they are today. As corporate account manager at UTB, Hannah is responsible for the strategic development of the introducer distribution through their network and club partnerships. I need to put my teeth back in. Interesting facts, 2 truths and a lie. We've not had this before. Hannah was in a zombie film. German is her first language. She plays five-a-side football. The lie is that German is not Hannah's first language, although she was born and raised there until she was 2.5. So there you go. So she was in a zombie film. Anything famous or?
Oh, it's a really terrible film, but it's still you can still buy the DVD. So
okay. Do you get any royalties for buying a DVD, or if someone does, or you got any money for it?
No,
Right.
no. I was
right.
Actually
Everyone, don't bother buying the DVD.
Don't, it's a terrible film.
And it was terrible. Don't waste your money. So spend it on something else. Anna, it's over to you. I will see you in about 20 minutes.
Marvellous. Thank you, Tony. So good afternoon, folks. I hope everyone is having a great start to the week. So as we know already, my name is Hannah Oades. I am the Corporate Account Manager for United Trust Bank. And today I'm going to touch on a few factors affecting the market, followed by a deep dive into the residential side of specialist lending. So let's get this right. Marvellous. Hopefully you can all see my screen. So before we go into who United Trust Bank are, I'm actually going to go back one. I just want to start by talking about a few factors that are influencing the market at the moment, including the affordability crisis. We've got legislative changes and also house price inflation, just to name a few. And it will make more sense in a minute as to why I'm starting with this. So if we start with the affordability concern, we can break that down into the cost of living crisis, which we know is driven in part by the Ukraine conflict, which is impacting the supply of grain, and also the global oil element through Russia. Now, this is forcing up supply chain costs and supercharging inflation. On the other hand, we have the base rate increase, which is, as we know, the monetary policy tool best placed to slow inflation. So the net effect of these two factors together is really putting a squeeze on household expenditure for Joe Public. At the same time, we have other variables to consider as well. So we've got labour shortages due to foreign workers leaving due to Brexit. We've got additional taxes on households. We've had the energy increase. We've seen a 54% increase since the 1st of April, which is astounding. We've got national insurance has been upped, and also council tax. So all of these factors really are adding to this sort of crisis. As if that wasn't enough to consider, we also need to look at the significant rises in house price inflation and what that's doing to the market. So I read a report, the Nationwide House Price Index report, the June one actually, that says on average this year, house prices have increased by £26,000. So you've got to start thinking about what all of this is doing to affordability. Another thing, such a cheerful call, is looking at the legislative changes we're going to see for landlords coming into play in 2025. So we know we've heard all about the EPC ratings and the expectations, and that presents a plethora of problems moving forwards, not only from an affordability perspective, as we've just mentioned, but also for the different property types that we're seeing, things like listed buildings, single skin brick, barn conversions, blocks of flats. What's going to happen to all of those properties? So all of these factors combined sort of highlight the changing demands of the market and how specialist lending is becoming, more crucial in tackling the current climate and also what we've got coming forwards or coming ahead in the future. So I thought it'd be good just to sort of set the scene a bit and talk about all the factors we've got to consider before we move on to my presentation in detail. So let's have a little look at specialist lending. So I'm not going to bore you with the history of United Trust Bank. We've all got better things to do today than that. But, if you do want to know more, do give me a call at the end. So who are we? Well, we are a specialist lender. We cater to the applicants, the needs of the applicants that don't meet the criteria of the high street. We like to use a common sense approach. So we have manual underwriting, although all of our system, are online. We have the 24-hour dip, etc. We use manual underwriting so we can start to look at those cases that are outside of the criteria. So I guess you could say we offer a huge amount of flexibility on a case-by-case basis. So I like to call it a meritocratic system. So how can we help you? Well, there are three main reasons that you would come to us, beyond obviously talking to our lovely team, which would be the main reason, obviously. So number one would be property type or construction. I'm talking above commercial, balcony access, farmhouses, grade 2 listed buildings. Yes, grade 1, we'll have a conversation. All sorts. Is it high rise? Whatever it is, you name it, we're fine with. And also the different construction types too. The second reason you may come to us would be complex income. So we're talking about self-employed, contractors, 0-hour contracts, multiple income streams. Again, another reason where we can really support you and your customers. Now, the third reason, something that I'd say is another reason a lot of brokers come to us, would be the adverse credit element. So I'm talking CCJs, I'm talking defaults, missed mortgage payments, arrears, those type of things. We are more than happy to support with. So let's start with our product range. So all of our products are residential. So for the avoidance of doubt, we do require that our applicants reside within the property. That being said, doesn't mean that we wouldn't be happy to look at a second residential property. I did one recently, actually, where the customer themselves worked in London for most of the time, but also worked in Edinburgh for part of the week. So we were able to do a residential mortgage on the second property in Edinburgh because we are able to justify if they're there a couple of days a week, it makes sense. So again, any sort of anything that's on the line or a grey area, please do call us. We're always happy to talk it through with you or suggest somewhere else you might be able to put it. So just to sort of confirm, we've got purchase and remortgage, interest only, unencumbered and second charge products. So let's have a little look at our purchase and remortgage proposition, which is on the screen. And what you will notice is that it's more or less identical for purchase and remortgage. So we have 3 tiers of products depending on the credit profile of the customer in question. So we've got 0 status products, 1 status and 2 status. I'll come back to those statuses in the moment. So let's just sort of focus on the criteria to begin with. So as you can see there, we lend up to 85% LTV and to the 85th birthday of the applicant. So we can cover some of those later life propositions. We lend in England, Wales and mainland Scotland. And our loan amounts vary from anything from £25,000 to £1 million. Although we can look at properties no less than £90,000. So that's a minimum property value there. In terms of our terms range from 3 to 40 years, and we can also do half years as well. And our age ranges are from 18 to 85. Now, one interesting thing is that we don't ask for a credit score. I know that's something that a lot of cases fall over with the high street. What we will do is use Equifax. So we use that to pull through any closed credit commitments and look at it on a case-by-case basis. What you will learn later on is that we do have some sort of adverse or default sort of parameters for as much as we're happy to accept. Again, when we've got through the credit report, we can see everything individually. And as I've said, and I'm going to say a million times, I sound like my mother now, repeating myself, we're happy to have a look, even if it's outside the criteria. So moving on, we do accept gifted equity and gifted deposits from a family member. And we have no restrictions on property type, which I'm sure is like music to your ears. So our sort of overall criteria for that is it mortgageable? Is it habitable? And is it structurally sound? And if the answer is yes to all of those factors, then the likelihood is we'll probably do it. Another interesting thing is that we do offer AVMs. So at the moment, I think if I'm correct, something like 70% of all of our cases used an AVM, which means it's free, it's quick, you guys are happy, your customers are happy, it's a win-win really. So that's sort of our purchase and remo in a nutshell. Before we move on, I do want to discuss a first-time buyer. Let's have a look. So I've just seen a question in there from Rakesh. Would UCB accept free employment income, main job, second job? Yes, the answer is yes. We will look for an average of or a total of 50 hours per week. But again, there is some flexibility on that depending on the circumstances. We do not accept benefit income. I'll explain the benefit income later. There's certain types that we will do, but I'll come back to that for you. No, to our shed, we do not offer right to buy. So yeah, purchase, remortgage, interest only, unencumbered or residential. So I'm just going to quickly move on to our first time buyer proposition. So it's up to 4.5 times LTI. Our first time buyers must be on a 0 status. That is our most clean credit rating. So no CCJs or defaults in the last 2 years. Now there is an exception to that, so we will ignore all mail order comms, and defaults below £300. So just to bear that in mind. Another useful thing to add is for purchase, applicants do require borrower legal representation with a minimum of 2 solicitors at the firm, whereas a remortgage and unencumbered and second charge, no borrower legal representation is required. Just a little knowledge nugget in there for you. So that's our purchase and remortgage. I'm now going to move on to interest only. And what I'll do is I'll cover the product sets. I'll go through the statuses, so all of the credit profiles, and then I'll start to talk about income, affordability, construction and property type, followed by some case studies. So, interest only, what can I tell you? Although we don't specifically advertise our product set in the Rio space, as you know, we can lend up to the 85th birthday of the eldest applicant. So that's an area we can support you with. We lend up to 75% LTV for interest only, and our minimum income, and this is joint income, by the way, is £50,000. You can see there our terms are between 3 and 40 years, just like our purchase and remo offering, and we will lend between the ages of 25 to 85. Unlike our other product sets that we just discussed, we do only offer a 0 and 1 status product set here. So again, I'll go through those definitions shortly, but there's no 2 status, which meaning the people with the most heavy adverse are not acceptable for our interest-only offering. In terms of equity, you can see on the screen there, so inside London postcodes, we'll look for £250,000 equity within the property. For anywhere outside of that, we will look for a minimum of £150,000. Meaning we don't accept first-time buyers for our interest-only applications. In terms of repayment vehicles, so we have got a few that are accepted. So downsize is acceptable up to 70% or up to 75% for other repayment vehicles. So we've got things like cash ISAs are acceptable. Sale of investment property is acceptable. Savings, downsize, pensions or endowments, just to name a few, they are all acceptable kinds. So although we are extremely flexible, what I would like to say is there are a few exclusions to our lending policy. So these are ones that are excluded for all products. So they include properties below £90,000. Properties with a commercial element are an absolute no for us. I say that, I can think of a few areas. So for example, we've had one where somebody was a personal trainer. They had like one of those little sheds at the end of their garden. they were doing a few PT sessions in there. We're fine with that. But I had another one recently where the individuals bought a 3-story townhouse. The top 2 stories were to live in, and the bottom one was to be a gallery, and that was not acceptable to us. So you can see we do have a very, 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 very tiny appetite for sort of a private self-employed business, but not something like a gallery or hairdressers or anything. Other things we will not accept. So a right to buy within the first 4 years, that's a no. Or right to buy, self-build, any of those not acceptable. We do not accept properties with agricultural ties. So it's a funny one. We have no limit on acreage. We have no limit on, the number of barns, stables, outbuildings, fine. But we cannot accept a property with agricultural ties. Another thing we don't accept, which is fairly surprising, even to myself at times, is new build. We do not accept new build, and the way we would define that is they're not the first owners to reside in the property. I know lenders have all sorts of different definitions, but yeah, as long as they're not the first person to live there, we are fine with that. So that is our sort of interest only proposition. I'm just seeing another question. Client's not on voters roll, that's fine. Foreign national has lived at the address for 4 years, but only has online documents as proof of address. I think that would be fine. Again, it's down to the underwriter's discretion. We'd need definite leave to remain or right to reside status in order to accept the application. And it's also helpful to know that all income we accept must be in pound sterling and must derive from a UK source. So I've had a case where a lady was trying to buy a property and her brother wanted to send her some money from America to support the mortgage. We could not accept that, unfortunately. Sorry, just a little more info than you asked for, but knowledge is power and all that. So onto our unencumbered range now. So for the avoidance of any doubt, to us, unencumbered means the property has no mortgage in place. So it could be perhaps from inheritance. It could be that the mortgage has already been paid off. And also the product is great for those in retirement. So you can see here some of our criteria. We can lend up to 75% LTV. And our mortgage ranges from £5,000, correct, you did hear me right there, up to £1 million, meaning we can actually cover a micro mortgage. I mean, £5,000 is tiny. I don't know about you, but I have not seen many other lenders that do that. And now the beauty of this product really is no mortgage history is required. However, another caveat, what I like to do is obviously see if we can find the best product for the customer. So let me just run a scenario by you. A customer has paid off their mortgage in the last 2-3 years. We could see that they had, an excellent track record of paying off their mortgage, but they want to go for an unencumbered product. Now, what I can tell you about unencumbered is it's more expensive than remortgage. But the good news I can tell you is that if we can have a discussion about this in detail, we can look to put it on a remortgage product, which is far more competitive. And the reason being is if we can see that they have repaid their mortgage on time and kept up to date with their payments, then I'm sure we could get comfortable with the notion that they will do so in the future. And therefore, we could start to have a look at maybe fitting them onto a better product. So again, always worth giving us a call with something like this. Like our other products, we lend in England, Wales, and mainland Scotland. What else can I tell you? Borrower legal representation is not required. Again, we've got AVMs. I would recommend checking out our product guide, which you can see is available for you guys to look at because our criteria has been changing more recently and we've been improving it, which is always good to know. So as I've said to you already, we can operate in the grey. On a referral basis, it's flexibility to look at all sorts of things, even things outside our criteria. So please do give us a call. Obviously, it means we want more competitive rates for you. That means happier customers. It's a win-win situation. So if you're not sure, just pick up the phone. So I hope you've got a pen and paper ready. I have got some telephone numbers and some email addresses. I will show you again at the end, but always worth making a note. So the telephone number for our mortgage inquiries helpline is, are you ready? 0207 031 1551. And my direct line is 07423 789 983. If you want to email us with any questions or you want to speak to Tony, he will also be able to offer you some fantastic advice here. It'll be mortgage.inquiries@utbank.co.uk. So, moving swiftly on, let's head over to our second charge products. You can see there, again, up to 85% LTV. Our loan sizes range from £10,000 to £500,000, and we typically ask for 12 months mortgage history, although you could probably get away with 10 months if you ask this nicely. Now, we have ERC and non-ERC products, but we will allow up to 10% overpayment per year, which is fantastic news for those customers on an ERC and for those looking to pay off a little bit more. So as I promised, I'm going to show you here our stated definitions. I'm going to cover these fairly quickly, and then I'm going to cover the employability side, or employment side. So zero status, zero missed payments in the last 12 months for secured loans, and zero CCJs or defaults in the last 24 months. One status, one missed payment on a secured loan or one CCJ or default in the last 12 months. Two status, two missed mortgage payments or two missed secured loan payments in the last 12 months. So just remember 0, 1 and 2. Now the exceptions there you'll see in white at the bottom. So if it's less than £300 mail order or comms, we can ignore it. So I'm conscious we've got 4 minutes left. I've got so much to tell you. So let's just cover this in a little bit of detail. So property type, we will accept all of those on the screen now. As I've told you, we don't mind about floor height. We don't mind about acreage. We're happy with all of the above. And the more flexible side of it is actually the construction side, which I'd say is probably our biggest USP. So is it mortgageable? Is it habitable? Is it structurally sound? If the answer is yes to all of those, then the chances are we're probably going to do it. I'm talking steel framed, timber framed, concrete, single brick, thatched roof, ex-local authority, flat above commercial, flat above food outlets, high rise, as long as the EWS form or evidence of A classification cladding is available, then we are happy. Farmhouses, annexes occupied by short-term ASCs like Airbnb are fine. So mortgageable, habitable and structurally sound, then we will probably do it. A little bit on the income here. So we will accept 50% of overtime, bonus and commission. We accept, I could do a half yearly bonus, but annual would be unacceptable for affordability. And again, another useful thing to note is that we stop taking into account employed income at age 70 and start to use pension. Now, that being said, if you've got an acrobat, then 70 is the hard stop. But if you have somebody that works in finance or some sort of landlord or whatever, we can accept that income up until a much old age of 75, maybe even 80 if you ask nicely on a referral basis. For self-employed income, you can see there our exceptions. So limited company directors' salary drawn and dividends. Sole trader is net profits. And then contractors' day rate times 48. So for all of these, we will look for 2 years evidence, SA 302s, tax calculations, etc. And we'll use the latest year's figures, not an average. Again, you can see here, contractors, sole traders, all fine. We will also accept buy-to-let income, as long as it's the tenancy agreement is 130% of the mortgage payment. And again, we look for 2 years SA 302s and all of that malarkey. In terms of benefits, as I did say, we will get onto this. So child benefit, child and working tax credits are acceptable, and rental income as well. We will not accept other types of benefits, PIP, that kind of stuff, not acceptable. We will accept customers in a DMP, subject to 12 months evidence. However, we will ask for 12 months discharge from an IPA. Bankruptcy, not acceptable. We look for 6 years from discharge. I mean, I could go on forever, but I'm sure Tony is like, please get off. So the last thing I'm going to show you is loan purpose, which, as my peer said before, all types for legal purposes are accepted. We do not like the avoidance of bankruptcy, and we will not accept cash into a failing business. And that, my friends, is the end. There are some case studies which you can read whilst we talk in the background if you would like.
What we're going to do, Hannah, we're going to put your slides actually up from our website on the Mortgage Show part of our website, so that they can be. It's only because we're rapidly running out of time. That's all. I want to get to the questions. Otherwise, we won't get to the questions. So, what we'll do, everyone, we can do this whilst the questions are on. So you can see the first one there, and then the second one. I'll just ask the questions, and we'll cover those. So Rakesh has asked, would UTB accept 3 employment income, main and second job, being over 2 years, and third job has been 7 months? And can you also accept DWP benefit for income?
Okay, so yes, we can accept multiple income streams. We look for 3 months in the current role if there's no probation with 12 months employment history. Again, it would be subject to the right evidence for the second job. We would look at 50 hours normally, but again, depending on the nature of the work, we can look at the flexibility. So for example, NHS workers, fire men and women, we can accept 100% and all of the hours. In other instances, it would be very much stopped at 50. Again, it would be a case of sending it over so we can look at all of the components. And in terms of the benefits questions, the answer there would be no.
Okay. And do you offer, Arshad has asked, do you offer right to buy?
Unfortunately not, my friends. It's purchase, remortgage, interest only, or residential.
Okay. Lorraine has asked, client is not on voters roll, foreign national, has lived at address 4 years, but only has online documents as proof of address. Is this acceptable?
Yes, but as I said already, we would need indefinite leave to remain or right to reside status. We can't accept visas or any other status at this time.
Okay. Suhan has asked, is the buy-to-let rental income the net profit?
So it'd be the total income received from the customer. So from the if you've got the landlord, let's just say let's just pretend we'll use simple numbers. Let's just pretend their mortgage is £1,000 per month. We would need the rental income to be £1,300 per month in order for us to consider that to be self-sufficient. May I just caveat that by saying we would need 2 years evidence of that 2 SA302s and the correct statements.
Okay. Final question from Matthew. Hi, Hannah. Will you lend on a 64-year remaining leasehold property?
I think our minimum is 60 years, so just about.
Is that 60 years at end or 60 years at start?
I believe it's 60 years at start.
Okay.
But again, I'll double check that afterwards.
Okay, fine. No more questions coming over. I'll ask one that you've actually put yourself. What is your criteria on lending into retirement?
So yeah, I have briefly touched upon that. So as I've said already, we can lend up to the 85th birthday of the eldest applicant. And what we will start to do is take into account the pension income from the age of 70 years of age. I have seen 75. I'm sure there have been some where we can take it in to consideration a little later. So it would be a case of looking at the nature of the job. So for example, acrobat, tree surgeon, cricket player. Come on, let's be realistic. Are they going to be able to play that and have such a great income at 85? Probably not. So 70 is the limit there. But landlord, accountant, lawyer, all of those types of roles are acceptable, and we can extend that age up until 75 or maybe even 80, depending on the circumstances.
Okay. Hannah, thank you very much. No more questions. Thank you very much indeed.
Thank you.
Simon will remove you from the room. Don't try and close yourself down. It'll take you out. Otherwise, you might take down the whole thing. It has happened, by the way. But thank you very much indeed. We'll see you again soon.
Thank you, guys.
Okay, everyone. This is the final part. This is me. Right, okay. A few new bits in here today. You'll be pleased to hear for those who've attended our shows in the past. We do have quite a lot of people we've not seen for around a year or so on our shows today. So thank you for attending. I will crack on with this immediately. A little bit, I always now start a little bit of what's happened in the last month. Well, we know what's happened in the last month. And I did cover this last month, but I've added to it basically rate increase. I've not seen if there's been a increase in the bank base rate yet. I've not been able to check the news, but we're all expecting it. So we can then expect lenders changing their rates what seems like sometimes every couple of days. It's just gone absolutely crazy. Very, very difficult to keep up to date with. We all know that, and I think there's still some profiteering going on with some lenders, unfortunately, and also, if you're having to raise rates because you can't cope with the volume, get your staff working a little bit harder, quite simply, as a lender, quite simply. I mean, we're seeing some turnaround times. I've got one lender who's a month turnaround on inquiries, and we're then being asked, why is there no business coming over? Well, how can we give you business when it's going to take you 30 days to get to it? It's not feasible. But there's two bits at the bottom there. You'll see surveyors. I'm trying as much as possible now to get lenders to try and bring in desktop valuations, home track type internet valuations, AVMs, that sort of thing, because surveyors really are now it's just getting quite ridiculous. If they can downvalue a property, we know valuers that are downvaluing everything by 10-15% just to protect their PI cover. It's got to stop. It really has. And that last one on solicitors, you're going to see in a few slides, I now deal with a lot of the cases that go to solicitors quite simply because we saw one the other day where the solicitor advised the client not to sign the mortgage offer because the client would have to let the lender know if there was a change of tenancy. Quite standard. I've seen it in every single agreement that I've ever done. It's quite simple to make sure that if someone is letting it on a single AST, they're not going to kick the tenant out and all of a sudden get sort of 3 families of refugees in there, for example. They just want to make sure it fits within their lending criteria. And he advised her not to sign it. Absolutely crazy. She has now signed it because we spoke to her and explained to her. But he was just trying to stretch it out. That's all. We did warn her beforehand. Stretching out as much as possible because, of course, it gets paid by the hour. But here's some news. Here's some great news. You might have seen if you had received an email from us yesterday. We have an exclusive product, everyone. Heavy refurb bridging product, exclusive to Specialist Hub. And as you'll see there, maximum of 90% of current market value, which is pretty much unheard of, really. 300,000 to 15 million, maximum 18-month term, minimum 3 months. And no ERCs or exit fees after 3 months. Well, it's not exit fees anyway, but there's no ERCs after 3 months. 0.8% for a 90% LTV product. Absolutely fabulous. And you see at the bottom there, we've worked out your client could receive 84.7% LTV after the lender deducts their lender fee and interest of 3-month interest payment. A fantastic product. That can be used on purchases. That can be used on existing as well. So you've got somebody who's looking to raise money on an existing, they could potentially get up to 90%. So if you've received the email, there's a calculator in there that we've designed that's actually very, very clever because you just put in what the property's worth and it will tell you the maximum that they can borrow over the term that's actually there. So that's absolutely fabulous product. Oh, and everyone's telling me it's now gone up by 0.5%. Wonderful. Okay. Expect every lender to change their products again within the next couple of days. And all those lenders that change their product, their rates over the previous couple of days, you're a bit daft, really, because you knew it was coming anyway. But anyway, back to this refurb product. As you will see there, that is fabulous. Contact the team if there's anything that you've got you think will fit through this. We've got this as an exclusive. We've got a certain tranche of funds that we can use up, but it's many, many millions. And we're expecting to use that fairly quickly. So a little bit of information about us, what we can offer you. I always do this because for those of you that have not used this in the past, there's a lot of people on today that have used this in the past, but this is for those of you really that haven't used this in the past and how we work, because we do work differently from many others in the marketplace. Because what we see is a partnership. I don't see us as a master broker and you as an introducer. I see this quite simply as a partnership, and that's what we call our introducers, one of a very poor word, broker partners. So it's about two entities trusting each other. We want to make sure that you tell us the truth, because we need the truth to make sure we get the deal through. So we want to know warts and all what's going on with that particular client, what's going on with the case. And we'll then know we've got no nasty surprises too many times in the past, a broker partner has kept something from us, thinking we wouldn't find out, and it's come up after the client's forked out a load of money for evaluation. And of course, then the blame game starts. So we want to make sure, but of course, you've got to trust us, trust that we will do what we say we'll do. We've got the partnerships with lenders that we've got, that will pay you when we say we will. But it's very much about two entities trusting each other, and also understanding that there's no point giving my staff a hard time if a lender that we place business with, that you want us to place business with, has got a 15-day working turnaround. We're not magicians. We can't do too much about that. We have to stick with that particular lender if that's what you want us to do. We can find alternatives. That's what we're here for. We want you to want to grow your business. I want you to be here indefinitely as a broker partner of ours, placing business with us, because that's what we're here for. If I haven't got people giving me business, it doesn't matter how many lenders I've got, I can't trade. As simple as that. And it doesn't matter what your FCA status is. If you are not authorised, there are ways of actually putting business over, but I will talk to you on that separately because now our PI cover doesn't accept certain business from entities that are not authorised by the FCA. And as it says on the last bit, we want to make sure you stay informed and compliant. That's why we have GDPR checklists. That's why we want to we send out EPC literature, which is absolutely fabulous and can help you to write more business. That's what we're here for, because unfortunately we have to rely on the financial press for a lot of what we hear, and some of it is so poorly written, it's unbelievable. So we'll just make sure that you stay informed and compliant at all times. Our products, pretty much everything: regulated mortgages, regulated seconds, bridging, commercial, buy-to-let second charges. Buy-to-let second charges, very unused product at the moment. I think that's going to go absolutely crazy over the next couple of years with all the EPC changes, and so many clients now in long-term fixed rates. And it's not a case, those lenders that will not allow a second charge, we've now got ways of actually bypassing that as well with some of our lenders. So that's basically what we do. And on these two bases, we can either act as the packager, because we have packager status with most of the lenders that we deal with, or if you just want to introduce the case, my staff have been doing this long enough and are talented enough to either work as a packager or actually give the advice. And I see so many packagers who are dipping their toe into the advice process. We've been given advice since 2004. So that's quite simply, that's the way we work. You choose. It's not one or the other all the time. If you want us to package one case and the next case you want us to give the advice, more than happy to. It's not the products we offer. This is why we are different. It's not the products we offer, quite simply, because we all offer exactly the same, unless we've got an exclusive, of course, like the one I just mentioned. The people we employ. I will not accept anybody into this company unless they've got 5 years specialist financial services experience. Be that with a lender, be that with a broker, but there has to be within the specialist market. I'm just not interested in employing somebody. I get people coming to me who've been like 15 years with a building society, for example, as a cashier, wanting to go into mortgages. I'm not interested because they haven't got that experience I need. Multilingual staff, which helps tremendously with some borrowers. I'm not going to try and pronounce any of those. I can probably pronounce Hebrew. That's about the only one. But that helps us tremendously. The Hebrew, especially, that helped recently on a case where all the stuff came over from the client, pay slips, etc. Client lived in Israel and everything was in Hebrew. So as you can imagine, that was incredibly useful. But the main one is mature life experience. You do not want to be speaking to people who have just come into the marketplace. You don't want to be speaking to people who just come out of university and really don't know what they're talking about. It just doesn't look good on a packager or a broker such as ourselves. You want to be speaking to people who you would see as your equal. And that's basically the way we like to work. And why we're different, it's also our lender relationships. I've been doing this so long now. Many of the people that I grew up with in the industry, when I first started in the industry, they were BDMs or people I even work with. There's about 15, 20 of those now that are in senior positions within lenders. Now that can help massively because it comes into, it's not what you know, it's who you know type of situation. It's how seriously we take compliance. We do take our compliance very, very seriously. NACFB said of all their members, we were an absolute country mile ahead of anybody else with regards to our compliance. And we've got our next compliance one next week at long last. It's finally been booked in, so I'll let you know how we get on. It's how serious to take prevention of financial crime. We come across numerous cases now where we find somebody who's trying to defraud a lender. You don't want those going through. We don't want them going through because, of course, the regulator will then be crawling all over us. Why didn't you find this? So we are very, very hot on that. And it's not our numerous awards from the financial press. Those of you who watched one of these shows before, know that I'm not a big fan of the awards system within financial services. Fine for lenders, because most lenders can be voted for, but there are circumstances which I'm going to come on to in a couple of slides where you can just see how, I'm not going to say that particular word, but you can make up your own mind on what you think. But if you're someone that looks at a company that wins awards as being at the top of the market, maybe think again, because this is really what you're up against. You've got brokers out there going for awards that are asking all their friends to vote for them on Facebook, Twitter, Instagram, probably TikTok as well these days, who knows. But that was one where one person, if they said they voted for that particular company, would win 250 quid Amazon voucher. That's wrong. Why should somebody get a best broker award or best broker website and a number of others in 3 categories because all their mates have voted for them? That is entirely wrong. This is more recent. I had a week's holiday recently. Unfortunately, my wife had a very, very bad stomach for a week, so we couldn't go anywhere. So I was bored out of my brain, and then saw that there was an awards due announced, and this was announced. I'm not going to say who it was. And as it says at the bottom, please note, I'm not alleging that any wrongdoing has taken place. Okay, in any way whatsoever. I'll let you make up your own mind. But this was sponsored by HSBC, and these were the winners. There was 20 winners, as you can see from all those logos. Numerous companies, you would have heard probably of all of those. And these were the sponsors and the companies that advertise with them on a regular basis. So just going back and going forward, and you can see, you can make up your own mind. And just to finish that off, these were HSBC sponsored 2 categories, Best Surveyor and Best Network, and Central Trust sponsored the Best Second Charge Broker, and Central Trust are a second charge lender. Okay, and these were basically HSBC won 2 awards, BDM of the Year, and the sort of top award, which was Best Mortgage Lender. That's the one that all mortgage lenders go for. And Central Trust, the Best Second Charge Broker, was awarded to Loans Engine, who are a subsidiary of Central Trust. So make up your own mind. Entirely up to you what you think of that. I know what my thoughts are. But if you think that a broker winning an award makes them better than anybody else, it's really not going to happen. It's really not the case, because, well, you make up your own mind. I'm not going to say that word, that C word. What else can we offer? Designated underwriters from start to finish. Except we now have one experienced person dealing with cases from pre-offer to completion, and that experienced person is me. I will step in when needed, just to ensure that 2 sets of solicitors aren't trying to stretch things out to the detriment of the client, because it happens all too frequently. So I now get involved in those, and also in some cases pre-offer where we've got lenders who are being daft, for want of a better word, with what they're asking for or what they're actually coming up with. You'll probably see a blog coming out from me fairly soon on how lenders are treating self-employed clients, because there's a complete lack of understanding within certain lenders of how the self-employed system works and how self-employed are paid. And that covers company directors as well. And at times, some of the stuff we've been asked for recently has been laughable. The other thing we offer is commission paid immediately on loan completion. Now, whilst I just went in the office a short while ago, we've had 3 completions this morning. As soon as I finish today, I will be paying all 3 of those brokers immediately. We haven't been paid yet on any of them, but all 3 of those will be paid straight away. I won't cover some of the examples of what I've done before, but I have paid in any detail, but I have paid people on the day I renewed my wedding vows, on my daughter's wedding, and when I was in hospital last year after a shoulder operation, about 4 hours after I came round. So we pay on the day of completion, as long as I've got your bank details. No commission clawbacks, also very, very important, unless it turns out to be fraud or unless the customer cancels within the 14-day period that a lot of lenders now allow. The other thing we can offer is that this is very important because we're long established in the second charge market, and second charge lenders are basically want us to do everything. We have searching facilities for Equifax and Experian, which we use to search every client that comes into us. That quite simply means that we immediately know what the client's circumstances are. So as soon as we got their permission to do so, we do a soft search, doesn't affect their credit rating, anything in that nature, gets the credit score that we know that lenders will look at, not the credit score that the clients would receive, because different lenders have different requirements. And Equifax, for example, has 4 different credit scores. So we will get that straight away. That just ensures we don't go down the wrong road with that particular inquiry and find out 3 weeks down the line that the client's got 15 defaults they didn't tell you or I about, or you or us about. So that's something we do straight away. It saves immense amounts of time. It really does, and just means my staff aren't wasting time on something when they because they know which road to go down in the first place. And this is the other thing, all our business is sourced now by our own in-house software, except for regulated first charges. I'm not that crazy to try and do that because it will just be completely impossible. But anything on the second charge side is covered by loan quote. Anything buy to let or commercial is covered by commercial quote, and all bridging is now covered by bridge quote. And all of our lender panel are on those three. So you phone one of my staff and say, I've got this inquiry. What are the terms likely to be? What's available? We can give you an answer within 45 seconds and have a PDF over to you with the terms within probably 90 seconds. Really is that simple. Data security, as you can imagine, after what happened in 2015 with that rogue member of staff coming into my office at 11:30 on Saturday night and downloading a load of stuff. Unfortunately, we weren't sure who it was, but we know it happened. That is now very, very hot. So any data that we get from you regarding your client is not going to go anywhere. Nobody can access it. Our second charge panel, not going to go through all those because there's loads of them, but we deal with everybody in the marketplace. I've just taken out one, which is Precise, because Precise have announced yesterday they are withdrawing, they said temporarily from the second charge market, but their proposition hasn't been anywhere near competitive for quite some time. So that's what we've got at the moment. If you use a mortgage club, now just keep an eye on that. I think I counted last night. I think there's 17 there. But just keep that in mind. If you use a mortgage club for your second charges, this is the L&G Mortgage Club with Marsthaven, who stopped lending, I believe it was earlier on this year. Precise have just withdrawn. They've got Shawbrook and UTB. That's all they have. That's it. So if you go through L&G Mortgage Club, you've just got those options. Doesn't really give you a whole of market. And believe me, they're not two of the cheapest at this moment in time. There are others that are cheaper out there. If you're going through Simply Biz, you've got Central Trust, who obviously are still lending. Marsthaven, as I just said, stopped lending early on this year. Paragon stopped lending last year. So why they're still on there, I don't know. Precise have just gone. So you've got Shawbrook and UTB. So that's, again, if you have a second charge, okay, so you go through a mortgage club, you might get a bit of a prop fee. You'll get a prop fee with us as well now on cases over a certain amount. So one of the things I'm covering at the moment is our commission structure. You can ask for that. But just really, I mean, we've spoken to, I won't say which one of the two it is, but we spoke to somebody in the help desk regarding the second charge at one of these two mortgage clubs, and it was laughable with what they were coming out with. They didn't have a clue. Package first charge panel, really family and foundation are the two that you probably know very well, but also together. Now, we're very fortunate that when Together came back, we were approached by them and said, yeah, please come back on panel. So we have the Together product. They're not gone out to the whole market again, and they're not likely to either, because they're actually doing more business now than they were pre-lockdown with fewer brokers on board. So if you do have any of those cases for those particular lenders, obviously I've missed Precise there as well. So you have cases for those particular lenders, you can give the advice on those, and we act as packager on your behalf. Our specialist buy-to-let panel, it's extensive, as you can see, covers pretty much every scenario. And this is from the specialist part of it. We're not going to have the likes of TMW or BM Solutions on there because there's no point, because you deal with them directly yourself, no doubt. If you don't, we can help you with those as well. And our package panel, as you can see, if you want us to package, all those lenders we can offer packaging. And for these particular lenders, if you want to place a case with Family, Landbay, Quantum, Fleet, Lend Invest Together, Foundation, Precise, West One, we don't charge any packaging fees. Now, what they will save your client is this. As you can see, what's out there, 3MC, 95 quid, all the way down to TMTC. I don't know what that means. It's £199. Or sorry, TBMC is £299. Missed that one. So between 95 and 299, we don't charge anything whatsoever. And we pay you the same as you get if you went to any one of those packages. And I bet my staff are more experienced. Our bridging panel on an advised or non-advised basis, because of the business we do, we have pretty much packager status with every single one that you can see on there. So you would earn the same as if you went direct. But what you've got is two things. You've got the benefit of my staff who know the products inside out, but also the benefit that I will know probably of those 10 of the people at senior level that I can phone if something goes wrong and try and get it sorted. So that's the other benefit that we have, is that I can make that phone call. I don't deal with underwriters at lenders. I deal with the senior people. I only contact them when things do go wrong. I will probably say Roma is one of the only ones I never have to make contact with Scott Marshall, their MD, because nothing ever does go wrong, I'm pleased to say. But any of those, we have obviously asked the procedure we have in place gets us through a hell of a lot of business that might be sort of like touch and go on day one. Our commercial panel, all the high street, as you can see, a few lenders up we haven't got on there are private banks, but we can access private banks as well. We don't publicise who they are, but everyone you can see there will do some element of commercial. Alica are doing a lot of business at the moment. InterBay are doing a lot of business. And who else we got on there? Obviously Together and Shawbrook. We're placing a lot of business with at this moment in time, and Yorkshire Building Society. If you wish to advise on second charges, I'm not going to read all of that because I'm very, very conscious of the time. We can help you access every lender in the marketplace. So if the situation, you've got a second charge and you want to source it, well, our sourcing software is a lot more accurate than the three out there that's on the second charge side. And the reason it's more accurate is actually it's written and kept up to date by people who underwrite cases, not by an IT team. And that can make a hell of a difference. It really can. So our system will actually know where there's a near miss, as an example, on a second charge. So you contact us. We put the details through our system. We help you with the file compliance. We'll give you what the options are out there. We instruct the surveys and issue consent if a restriction is registered at Land Registry. We package the case on your behalf. There's no loss of control. We pay you your income on the day of completion. We don't charge any packager fees. So it could be a 10 grand case and we might only earn £200 out of it. You could be charging the client 1,500 quid if you wanted to. We don't actually charge any packager fees at all. So you choose how it works. If you wish to know how much we pay, just type the word PROC type your message box down below and we'll send you over this. We do have to update this. We've got one lender that's just come to the market that I'm going to be updating this afternoon. So we'll probably send these out first thing tomorrow morning. But just type the word PROC. Sorry, it's very warm in this office, unfortunately. So I've drunk about 3 mugs of water so far whilst I've been sitting here this morning. So, okay, beware of the bandits. Now, a lot of you would have seen this one before, but I've changed it last night because I came across an absolute horror story recently. Now, the previous one was about an InterBay case where the broker lied and said InterBay didn't pay proc fees and they were charging the client 45 grand. Well, how about this one? Castle Trust completed a case in 2019 for a lord and lady, who you're going to hear a bit more about in a moment. This is how I found out about this. And this delegate, it wasn't a delegate, it was, I need to change that. It was actually our new broker partner that we've taken on was paid £7,000 by the master broker and was advised it was half the proc fee. The master broker earned £117,000. Just take that in, 117 grand and paid 7. So just watch what you're being paid and just ask for written confirmation. Ask for the KFI or ESIS or whatever they want to call it. Ask for confirmation of what's being paid because that is wholly wrong that someone walks away with 110 grand helping out a customer that was not theirs in the first place. That is disgraceful. But to be expected from that particular person, I think. Okay, case study. A few case studies now. This is a Roma finance case that we completed at the end of last year. We're now writing the exit on this particular deal. A 20-bed property that had planning for a 10-bed HMO, so had been used illegally for a while. One of the issues was that the neighbouring property had been nicking the property's electric for a number of years, so that came up and had to be sorted. But we arranged a 10-month bridge for 2.15 million. No broker fee, no packager fees, no broker fees. Introduced a partner. Got 1% of the advance because we get paid 2 by Roma, 21 grand on the day of completion. So that was the first. That's the first one. This was the two I mentioned earlier on, the most difficult case that I've ever done. This is the most difficult case I've ever done. Now, we all know the situation. You sometimes get clients, you'll get an okay from a lender, and the lender will say, right, we need these, we need 8 things from you. We need 3 months bank statements, business and personal. We need this, we need that. Okay, this is our situation. We ask for 3 months bank statements. We get 3 days bank statements. So we'd ask for them again, and we then get another 6 days bank statements. We asked again, and that went on. So that was the bank statement side of it. For every property, we asked for example, tenancy agreement. We'd ask for 19 tenancy agreements. We get 1. Then a week later, we get a phone call. What's still outstanding? Well, the other 18 tenancy agreements. We'd then get another one. And that took place over the course of 2 months on all 19 properties. The most difficult case because of the people that were actually managing this particular portfolio. It was horrendous, absolutely horrendous. There were properties on there that had regulated tenancies. So this is something that Castle Trust were prepared to accept. There were charges on properties that should have been removed 16, 20 years ago that hadn't been. 3 of the lenders had actually were no longer lending. Try and track those down. One was with a council with an equitable charge because they had to go and do work to the property back in 2001, which we had to try and track down somebody within Wandsworth Council, which took over 2 weeks. It was horrendous, but got it through. Introduced a partner and 45 grand from that case. And he gave us a name and telephone number, £45,000. As it says there, by far the most difficult case. I had to get involved because my staff were getting absolutely nowhere with it because they couldn't do, because I had to get involved purely because the solicitor that was involved with that particular client was the worst I've ever come across as well. This is what the broker partner who introduced that case to us actually said, and he put this on Trustpilot. So hopefully some of you will be putting some stuff on Trustpilot for us in the future, maybe today. And he said, if I can give more than 5 stars, I would. Now, I'm not going to read the whole thing because you can have a look at this online if you wish, or just go on Trustpilot. But basically, this guy's been given us, he's retired pretty much from the business. Wishes said to me, I wish I found you 20 years ago because, blimey, could I have done some business with you? Because he's earning as much now through us as when he was actually like working full time. Because we're getting business through that he would never be able to get through. As you can see there, they said that the experience and depth of knowledge, complete for a large product. It mentioned me, Tony Joe had the patience, and he's given us loads of business now because he's got so many contacts. Previously, he was just referring them on to somebody else, like another broker, to then place them with someone else. He's now referring them on to us, and we're able to help most of his clients because they're very, very good quality. And this was the other second most difficult, and this relates to the one with the horrendous commission payment that I mentioned a few slides ago. Our Lord and Lady, age 86 and 82, refinance of 18 properties, all in the same village for 7.9 million. Came to us in the middle of the first COVID lockdown. You probably remember how difficult it was to even get lenders to say yes, let alone to somebody who was age 86, who if COVID had hit him, probably would have killed him. It's incredibly difficult. And they'd also been defrauded of large sums on several occasions. So they didn't trust anybody at all. But we managed to get it through. Very, very difficult case. As I said, the second most difficult case. 30 grand introducer partner earned. I haven't been paid 7 the previous time. Now, we didn't earn 117. We earned 60, or just under 60. He earned just under 30. So happy that he was due to take me out yesterday for lunch, but unfortunately we couldn't make it. So he's taking me out next week for a slap up, all expenses paid lunch with whatever wine I want to choose from the menu. So that could be quite expensive for him. But an incredibly happy guy who's got a lot of high net worth clients who he's now introducing to us. And it's not what you know, it's who you know. Husband and wife business came to us running 2 very profitable children's nurseries. Mr. Run the financial side, he defrauded HMRC of 850 grand over the course of many, many years. Basically, hadn't paid any tax and national insurance for any of their staff for ages. And it was only found out because one of the staff made an inquiry to HMRC about something. They said, well, we haven't got you on the books. You haven't got any national insurance contributions whatsoever. Obviously, the investigator found out what happened. So clients divorced. She divorced him, and she knew nothing of what he'd done. He'd been spending the money on things that he shouldn't do. One was white powder, and the other one was ladies of the night, unfortunately. So he divorced. But everything that was in his name, which included both of the business premises, their house, and a couple of buy-to-lets, was subject to a Proceeds of Crime Act charge. Now, if you've ever tried to get through a deal where there's a Proceeds of Crime Act charge, it is bloody difficult. It really is. But in this situation, it was deemed impossible. Barclays called in both commercial mortgages. The Northern Rock residential mortgage had expired, got over term, and she was going to lose everything, literally everything. And this was a woman who had 300 grand sitting in her business account. But she needed to repay a considerable, it was close on £1 million on the Proceeds of Crime Act charge. Declined by everybody and been through multiple brokers. Came to us. It declined due to reputational risk, quite simply. So came to us. What did we do? Well, we did what everyone would do at the start. So we tried different lenders. We contacted Together Money because we thought this is probably something they would look. But their compliance department said, absolutely no way. Handed to me as a decline. I said, well, there's a deal here to be done because this is a less than 50% LTV, 300 grand sitting in the account. It's not her fault what's happened. It's the ex-husband. I then spoke to a director Together who I've known for many, many years, who was a BDM when I first met him in the 80s, gave him the case, and he said, well, I want to do that. I said, well, your compliance doesn't. And he said, well, give me 5 minutes. And literally Minutes later, he came back. Difference when an underwriter goes to a compliance department to a director going to a compliance department. And he came back and said, yeah, we'll do that. Introduce her just under 12 grand on the day of completion. And she's now a client of ours with the introducer still being paid. She comes back to us direct now because we saved her, basically. We saved her business. We saved everything she'd had and she worked for donkey's years, just from one phone call to somebody that I knew because there was a deal to be done. And this was basically the introducer. What he said, and I won't read all this to you, but the service you and your team provided and continue to provide is second to none and well beating. Thank you. So, and he still gives us business to this day, other business. And that client is now, I think she's now got another residential mortgage going through and buying another buy-to-let. So any cases you can't place, we've got 5 minutes left. Just go to type your message box in the bottom, type inquiry you have. We can call you back today. Or you can complete the decision in principle form. I believe the broker packs have already been sent to you around midday today, including decision in principle forms for all the products that we offer. Just complete one of those. They're editable PDFs, basically. Go to our website and submit a deal online, or just pick up the phone, give us a call on the free phone number. The staff are ready to take your call. If you are on LinkedIn, you should have received a request from me. I'm not sure if we've actually got to it this week because it's been manically busy. But if you haven't had a request from us, then you can always find me on LinkedIn, and you probably would have seen stuff I've done on LinkedIn. Please link with me on LinkedIn if that's the right phrase. If not, you should have a request from me coming very soon. So please, again, link with me. Just find out with basically updates on what's going on in the marketplace and other bits and pieces. If you like what you've seen today, you would have been sent one of these also today, which is our agency application. Don't need this back to get a case, but I need it back before I can pay you a commission on a completed case. Because that's basically an FCA requirement. There is actually a legal agreement in place. So get that back to us as soon as possible. Our next specialist mortgage show, 8th of September. It's not quite the first Thursday. I'm not sure why we didn't do the 1st of September, but it's the 8th of September. And we have Avamore talking probably about bridging. I would have thought, I don't know what these lenders are going to be talking about because they all cover different bits. But Lend Invest will no doubt be buy to let. West One will probably be second charges, and YBS will be on the commercial side. So again, 4 different products from 4 different lenders. And our final 2 of the year are 6th of October, 3rd of November. You can see the lenders we've got there. InterBay will be speaking about another product they've got, not what Matt was covering today. And I just see different lenders every single time just to ensure that you're not covering the same old script like you are with mine at the moment every single time you watch this. Okay, feedback and CPD. You'll see in the top right corner there is a box that says event board with a little, mine's an orange circle, yours might be a slightly different colour with your initials in it. Just click on that, then click the red event box, and your feedback form will then automatically appear. If you can complete that, I said that right at the start today, very, very important for us. We need to know what you think of the speakers. It's absolutely vital for us. And then your CPD certificate will come out automatically afterwards. Sometimes there are some glitches in that. We're not quite sure why. 10% of you probably won't receive your CPD certificate today. So just contact us tomorrow just to let us know you haven't got it, and we will get that out to you manually. For feedback, this is my one request. Obviously, we do these completely free of charge to all delegates and also lenders as well, unless they're sponsoring. We just charge a small sponsorship fee. If you can just help us out, if you go to either Google and just type in Google Review Specialist Hub or Trustpilot Specialist Hub and leave us a review if you've liked or not liked today. We accept criticism if it's due. So go on and say what you think, but please leave reviews for us. Very, very important for us because that obviously matters when other people check out to see if we are as good as we say we are, and other brokers say we are. Don't go to Specialists Hub plural because that is another company entirely that is not even in financial services who started trading way after we did. Big thank you today to our sponsor, Roma Finance, great lender. If you haven't used them before, then contact us and we'll help you give them a try. They are a tremendous lender. They really are. But a big thank you to them today. And as for, we are almost bang on time, actually. I'm amazed. Thank you for attending today. Enjoy the rest of your day. Stay prosperous, and we'll hopefully see you next month. Thank you.